Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. It's yes, we caught it. Hey, guys, 200 pips, please secure.
Good morning, welcome everybody. Welcome to Stocks Network Trading. My name is Ron, my partner is Dave. Wow, guys, it's 6 a.m. Eastern. It is Wednesday, October 8th, and gold is on a tear right now. This thing is unstoppable. I think we're gonna get right up to 4,050 right now, that psychological area. We just sent out a trade idea at 4,040, and you can see it's running approximately 100 pips if you took it. Wow, like this is out of control right now. So I would be very, very careful selling, okay? Use feeler sells. If you're gonna go in for a sell, very small, feel it out, because every single dip, it looks like it's getting bought up. You can counter trade, but you gotta kind of measure your moves for like 20, 30, 50 pips. But you always gotta keep in mind that this thing is continuing to push up, okay? So all of the dips are getting bought until we see structure break on the higher time frames. Then maybe we can consider selling, but right now, use caution with selling, okay? But it's getting to that psychological number of 4,050. The next one on your chart maybe have 4,075 and then 4,100. But right now, it's all-time high territory. It's price discovery, and you can see it's discovering the price at the highs right now. So, just trade with the trend as much as you can. If you've been buying the dips for the past couple months, you're doing really well. Your account should be growing. But if you're fighting the trend, it could get stressful. But just utilize proper risk management, whether you're buying or selling, and just trade with structure as much as you can, okay? So thanks everyone for joining. We have a busy day today. We're going to go for the next 4 hours till 10 a.m. We got a lot to do today, and so I hope we have another good session. I hope you guys are ready, and so let's get started, okay? I know it's tempting to take trades right now, but you guys can watch the charts on your own. I got to go through everything news-wise, and then we'll get to the charts, okay? I know we might miss a possible setup or something like that, but we don't want to rush into trades and everything. We want to make sure we go through all of the news and everything like that, okay? But one thing I just want to highlight over here, there was resistance where there was a wick, and right there when we broke around 4,040 where we had that buy trade idea, this is where it's going up to 4,050. There's your 100 pip move. If it does retrace all the way back in here, that's what you can watch for maybe a possible dip buy back at that retest area, back at that 4,040 right there, okay? So I'll just keep it like that. And just one other level that you should watch before we do our top down is 4,050, like right around there, okay? Just keep an eye on that levels, and then I'll come back and we'll do a full top down analysis, and we'll really break down everything, okay? So I hope everyone's doing good. If you've probably hit maybe your daily goal already before we even start this call, that's fantastic. Some of you guys might be done trading at 6 a.m. Eastern over here, and some of you guys might be done trading. There's a lot of time for you then to eat breakfast and enjoy the rest of your day, okay? News-wise, guys, let's just get into this. U.S. government is still shut down, so tentative events are subject to delay, revision, or cancellation. We've seen that for the past week now. We have a lot of European news coming out today. You can see some Euro news, some British news. We got some USD FOMC speakers today. Just before Wall Street, during Wall Street, and at 10 a.m. our weekly crude oil inventories at 10:30 a.m. ECB President Lagarde speaks at noon today. We have a US 10-year bond auction today. We'll see if all of this data is released or delayed or canceled. And then our FOMC meeting minutes, guys. Okay, so this is meeting minutes. This is not the actual meeting where there's a federal funds rate. Are they going to increase, decrease the rate? We've already went through that the last one where they did decrease the 0.25%. Now it's the summary of that event. There's no conference. Powell is not speaking. It's just a meeting minute summary. They have it highlighted as a high impact event here at 2 p.m. And again, these minutes will probably be released because these were prior FOMC was before the government shutdown. So I'm assuming that these minutes, the summary has already been done, and it's just to release it today. Again, don't quote me on that. It's been a while since we've gone through a U.S. government shutdown. But I'm assuming that these were all happened. This event happened prior to the shutdown, so they will release these minutes over here. But just again, trade careful, trade accordingly if you're trading at this time in the mid-afternoon. Okay, so that's our news today. Again, we don't have much at 8:30 right after COMEX, and we don't have much at 9:30 or 10 a.m. Okay, for our session. Going into earnings really quick. This is pre-market right now, Wednesday pre-market. We have no earnings in the pre-market today. In the after hours, we do. We have AZZ. We got Resources Connection. We have Bassett Furniture and Richardson Electronics. I do not think that these are going to move the S&P 500, NASDAQ, or Dow. I wouldn't pay too much particular attention to these names. Okay, so just continue moving forward. News over here. Okay, so the Fed's still divided even as it flies blind. The rate cut debate, so they're forecasting another rate cut in the near future, but it's still raging even as the U.S. shutdown deprives policymakers of key data. So you can see that this might, affect whether we're going to get a rate cut, a pause, or a hike in the next FOMC here. Why? Because the U.S. shutdown and it's not giving the data. It's not giving we haven't had the NFP. So there's no labor market data that came out. A lot of maybe CPI, PPI data regarding like inflation may not be released. So, Powell and the Fed Reserve, they need this data in order to determine whether they're going to cut rates, pause, or hike rates. So they're being deprived of the data here with the government shutdown. So we got to assume that this is going to cause some chaos in the markets for a little bit. Whenever there's uncertainty, you can see gold right now. It's getting a lot of activity and it's continuing to drive to all-time highs. It's like a magnet right now for investments. Anytime there's uncertainty, especially with the government right now, there's a lot of uncertainty. When are they going to get the government started again? How long? It's been approximately like 1 week now where they've been shut down. So how much longer is this going to last? We don't know. So U.S. stock futures mark time with Fed minutes on deck. That's what I was just talking about. So the Fed minutes are on deck. We'll see. You can assume that when they release this, there could be some volatility because there hasn't been any news been released due to the government shutdown. And then you're going to get the high impact FOMC minutes being released later this afternoon. So please be careful if you are trading at that time. Okay. This is Ray Dalio. He echoes Griffin in seeing gold as safer than the dollar. It doesn't take an expert or to understand that gold is a little bit safer than the U.S. dollar currently. You don't have to be a professional analyst to see that. We can see it every single day when we're trading. NVIDIA in the news. NVIDIA to invest in Elon Musk's XA1 as part of a $20 billion funding project. What else we got going on here? Gold keeps rising after topping 4,000 for the first time, all-time high. Right now it's 4,050. Dollar nears 2-month high as U.S. judge least ugly. So this is what's causing a lot of confusion with a lot of traders right now. What's going on? We got some messages saying, Ron, the dollar is moving up and gold is moving up. I thought they're supposed to move opposite from each other. That's not the case, okay? DXY is just the US dollar, how it's performing against all other fiat currencies, major currencies around the world. It's how the US dollar is performing against the pound, the euro, the Canadian dollar, New Zealand dollar, Australian dollar, the Japanese yen, and the Swiss franc. So it's basically, when you're looking at DXY, it has nothing to do with gold. It's just showing you the strength of the US dollar compared to other fiat currencies. And all other fiat currencies are really shitty right now. So it's saying that the US dollar is the best out of all of the other fiat currencies. But that doesn't mean that when it's better than the other currencies, that it's better than gold. Gold is right now outperforming everything. So they're correlated the way how it's XAUUSD, it's paired against it. But I've seen for DXY and US dollar being bullish, and I've seen gold bullish at the same time. So when I saw that, that's when I threw all correlations out the window. I tread carefully. I like to see if the DXY is strong. Then I look at structure on gold, see maybe looking for possible opportunities to sell and vice versa. But just want to make that clear, guys, that these are not, you know, like you got to understand that just because DXY is going up, that doesn't mean gold has to go down, or if DXY is going down, that means gold is going up. Okay. So just use caution. Just remember, DXY is paired against the fiat currencies. It's not paired against how it's performing against gold. Okay. And what else we got going on here? Intel set to reveal tech details on new laptop chip. DOE eyes cutting billions in funding for GM Ford startups. So that's not great news over here with Ford and GM. Ford is down 6% right now. So that's terrible for Ford. What else we got going on here? EU rolls out a 1.1 billion plan to ramp up AI in key industries amid a sovereignty drive. So you can see AI is in the news, tech is in the news, NASDAQ is continuing to drive. There's a lot of now mergers, acquisitions. There's a lot of investments, funding going into AI with all of these big companies. We've seen some big stuff going on the last few days regarding all of this. We saw with AMD, right? So lots of this is going on. AI, fintech, financial tech, Aptasia aims to raise 375 million in South African listing. So you can see this is global. It's not just like in North America. This is all around the world, guys. Okay. So right now in the futures, we've got S&P futures are up 0.14%. Dow is up 0.15 and NASDAQ up 0.12. Gold is the one that's just driving right now. You can see 4,060 in the futures. It's up $54 an ounce and it's up 1.4% right now. Okay, so it's continuing to drive. Guys, this is our signal server on Trade Ideas. So yesterday we sent out a buy idea on Dow, and it hit over 200 pips. If you got runners or holding the trade, you can see it's continuing. If you had a trend line running it, you could have seen that it's making higher highs and higher lows, respecting this trend line and continuing to drive. Also with gold, guys, we just momentarily, just prior to the start of this call, had a signal come out 543 right here. You can see looking for a buy on gold at 4,040 or 35. It came right in here. See right there at 4,040. That's that resistance. And you can see it continued to squeeze short sellers. There's probably a lot of short sellers selling right there to bring it down. And then it just blew right through there. So there it is, 4,040 with a standard lot. 44 pips is $440, and continuing to run to 4,050 and 100 pips with a standard lot is a calm a day. It's $1,000. So congrats to those that took it. Hopefully now you guys are, I haven't looked at the charts right now, but I'm assuming that you guys are at a break even and have scaled out a little bit and leaving some runners, okay? And also with oil continuing to run as well, okay? Guys, if you need trade ideas, signals to help you guys out with your confluence, with your trading, we do offer those at SST with all of the other stuff we do here. Guys, there is, welcome everyone on YouTube. Thank you guys for joining. If you guys can hit the like button, we do appreciate it. Subscribe to the channel. There is a free Telegram channel pinned at the top of YouTube for you guys. If you guys are not in it, I would highly recommend you guys get into it, because there is a lot of scam Telegram groups that are trying to do what we do, same exact thing, but they're scamming you out of money. They're saying invest, give them thousands of dollars and they'll return you $10,000 at the end of the week, but you'll never hear from them again and they're just going to take your money. So the reason why I do this every day is also to get you guys that this is our legitimate Telegram channel. This is the one that we post daily for you guys. It's pinned at the top of the YouTube. Do not fall for any Telegram groups that look identical to this and they're asking you to give them money so they can invest. Dave and I would never ever do that, guys. Just use some common sense, be an adult in this situation, and just call them out on that, okay? If anything, Dave and I will be on these calls. You can ask questions, but this is our Telegram channel, okay? And guys, there was a blog that we did yesterday, Trading in a Slump, Recovery and Mindset. I want to go over this. This was like regarding myself. I was in a little bit of a slump and I got out of it yesterday, and I want to talk about this in case someone else is in a trading slump and can't figure out how to get out of it. I kind of want to help with that, okay? And this was Dave's post-New York session right after myself, and you can see they're pipping and dipping with the snipers. So guys, if you want additional live trading sessions with Dave, a private Zoom, that's available too as well, and with all of the trade ideas and all of the education and everything like that, okay? And on our website, guys, okay, if you need the education, we've got a lot of it, courses, long form boot camps, and long form webinars for a beginner level, for an intermediate and advanced level. Guys, I think we're going to move the time today for our webinar around 6 p.m. I know it's scheduled for 7, but there's the Blue Jays lost last night, so it's game 4. I believe it's at 7:15. So I want to go over our webinar today. It's going to just be on TradingView, learning your toolbox, learning your specific tools. If you have any quick questions, I'll help break them down. I want to make sure you guys know your tools, so it's convenient for you, so you can get used to those, because trading requires you to use your tools for charting and analytical purposes. So we're going to start it at 6 and maybe go till about 7:30, okay? So if you want to join us, everyone on Zoom, I'll have the link available for you guys. It will be recorded and uploaded to the website, okay? So we want to continue with like our Wednesday webinars, like the good old days, okay? And guys, here's all of our blogs available for you guys. Here's the one I was just talking about, Trading in a Slump and a Recovery, okay? I just want to look at gold right now, okay? So, that psychological area, 4050, okay? It's right there. Kind of didn't tap in, but what you can do now is, I know I haven't done a top-down analysis, guys, but you can kind of look at where there is now the first top at that psychological area, and now it's coming down one leg down, okay? So it could go back up, and then what we're looking for is a second top up there, okay? And then maybe we'll come down with that heavier second leg. But also, guys, don't always think that it's just gonna go up, come back down. Maybe it will come down into this zone, maybe halfway in here, find a neckline, come back up, and don't always assume it's gonna be a double top, okay? Because it could just continue breaking for a new high and continue squeezing and continue to break out, and then this zone will become support, and then you got another leg, continue to drive, okay? So just use caution. Again, we're not at the top-down analysis as of yet, but if you are trading, just keep an eye on this, okay? What time we got here? 6:17, okay? let's do a top down on gold. Let's start it, okay? And then I'll review that blog with you guys in a moment. But let's do some top down on gold and see how everything is moving, okay? So what we're gonna do is we're gonna move to a higher time frame. We're gonna move to the daily. You can see the daily bar. Holy shit, okay? Look at today's candle. It is an ignited bullish candle. Look at the preceding day. It's a short wick. If this was like a 5-minute candle, you can see the 5-minute candle, but this is a daily candle. Yesterday, opened bearish, found support, shallow support, didn't come into 50%, came back up, broke, closed near the high. Today, it opened bullish, ignited, short wick. So you can see how a daily candle pops and continues to drive, right? Just as if this was a 5-minute setup, same thing, but daily volume, daily candle brings a lot of daily momentum, right? So this thing is just driving right now, okay? Where can it go? You know, you got to use either fib extensions or psychological numbers, depending on what time frame you trade on, okay? So if you're like a 5-minute trader, you're looking for like $5 moves on gold from 4,050 to 4,055 to 4,060. Those 50 pip increments. If you're more of a hourly trader, maybe you're looking at $10 moves, like from 4,050 to 4,060 to 4,070, right? 100 pip. If you're more of like a swing trader, I would look more at $100 moves, like 4,000 to 4,100, 4,200, 4,300. And then if you need just those nice psychological numbers like everybody needs, I'm not just saying, go to, remember your 25-point increments, 4,025, 4,050, 4,075, 4,100, right? It's an online auction. So you make sure you understand why I always talk about that, okay? I think we need a webinar also on a trade, like auction theory, okay? Because that's another part of the financial markets that a lot of people don't understand. Auction theory. I can make it very basic so everybody understands it, or you can get more advanced and make it very complicated. I like to keep everything very simple, as if today was your first day learning how to trade. I don't want to overcomplicate things. So it's just basically how an auction, a live auction works. That's how it works in these financial markets as well, okay? So right now, you guys can literally see gold is breaking out, squeezing every single short seller you can imagine right now, okay? So first thing is, this was a previous all-time high right here. Look at the number 2, 3,500, 3,500 on the dot right there, okay? We bypassed that location. You can see we're nowhere near that, okay? But you have to understand that there was, someone asked me, Ron, how is gold breaking out like this? How is it even possible? But I'm going to break it down to you right now. It started, this previous all-time high was April. So you have all of April, all of May, all of June, all of July, all of August. So it's basically the entire summer of just being in this large bull flag. Like if you consider this entire zone as a bull flag, you know, like when we're looking on a 5-minute setup, this is a bull flag, right? It was coming up. There's the rally where it took us to that all-time high, and then it just came back down, came up, came down, came up, came down, came up, came down, came up, came down, and then right there, you can see at the end of August, early September, new monthly candle is when they broke it out. So remember when I always say to you guys, where it can either just continue to consolidate in the zone, right? This is where we kind of say it's like a no trading zone unless you know how to scalp these zones. And then another possibility is whoever accumulates more. Here, sellers were accumulating, sellers were accumulating, sellers were accumulating, sellers were accumulating, sellers were accumulating. But every time it came down, buyers were accumulating, buyers were accumulating, buyers were accumulating, and buyers were accumulating. So it's just like kind of like a sports game. Which team can accumulate more wins. So in this situation, if the sellers closed it below here, how they did here, I spoke about this. I broke this situation down multiple times in the past, but I don't want to continue with it today because you guys should know that that was a false breakout and how it recovered down there. But if we had one more time where they pushed it down, I would have flipped that box red, and then maybe gold would have been selling off. We could have had an entire different conversation right now. Maybe gold was selling off and we never saw this all-time high breakout, but there's been so much fundamental news around the world that's been happening. We have wars around the world. We have government shutdown. We have high inflation. We've got a depreciating dollar. There's so much going on, and the buyers or long investors here kind of speculated and were buying, and then the only other direction where volume can go is either breakout and continue to go. So that's where we are right now. If you gave me these three options, option one is continue to consolidate. If it was continue to consolidate in this zone, I would just continue to stretch these zones into the future. This option didn't work out, so the only other option is going to the upside. Okay. Now all of these zones are still in the market, right? You can still analyze these things, but we got to switch the color, right? That's not a red box anymore. Why? Because the volume has now officially closed above and retested it. So this, if gold ever retraces back into here, if you want a swing trade, that would be a great opportunity to buy that big pullback on discount and continue driving up. But we're nowhere near that now. So we got to just continue working our way with what we got right now. So last little bit, I've been talking about this zone right here, okay? And I'm briefly just going to talk about it. What I did was I just kind of boxed in the bodies of volume. I know there's wicks, but it's not, I don't just go up to every single wick. I go to the real volume right in the bodies. And you can see then when it broke out, it came back down and retested and held and continued to go back up. So that's a zone of support right here. Here's another. Try and train your eyes to look for like flags in the market. Another easy way I can say it is that's a bull flag, right? You can see it came, this is the rally. These two bars are the rally going up, came up, then it's bullish, bearish, bullish, and then eventually it's got a high probability it'll continue to break in its intended direction after it cools off, and it did that. So again, this is another zone to stretch in the future. Here's kind of another flag right here. Sometimes it takes 2 to 3 bars to see the flag. Right there, you can see when the market pauses. Here's a big rally, another rally, and then you see it goes up, comes back down, goes up, comes back down, closes in the box, comes back up. There's another rally and another bull flag. And this is where we have a 3-day starting this week, Monday, Tuesday, Wednesday. Are we going to get a Wednesday midweek reversal? Or is it going to be kind of drive Thursday, Friday, then over the weekend? Who knows? I'm just like kind of, you know, making a narrative for myself too. What happens if it keeps driving Thursday, Friday with a little bit of pullbacks but continues to make all-time highs? Then over the weekend, they announce that governments are going to open up Monday morning, right? That could maybe signal where gold will cool off next week, you know? I'm just trying to run it through because I see gold makes a lot of midweek reversals, Wednesday, Thursday. Sometimes they make a lot of weekend reversals. They on a Friday, then there's some news over the weekend. Then Monday they open up opposite direction. I've seen that before. I can show you like right over here. If you look at these dates over here, this was a Monday. Tuesday was when it hit that all-time high, then kind of reversed down. Here when it came in again was a Tuesday, Wednesday, midweek reversal to the downside. Here was another day, a Friday, where it closed at the high, and then over the weekend, gold on a Monday came back down again right here where it closed on a Tuesday and at the highs again at that supply. Then Wednesday, midweek reversal, they brought it back down. Here was another one on a Friday where it closed in that zone, and then on a Monday they brought it right back down. So that's where I've seen that happen before, and today is a Wednesday. But it's continuing to drive. So I'm going to assume that it's going to keep driving with some pullbacks, and it will keep driving maybe into the weekend, okay? And then we got to see, will they announce maybe the governments open up over the weekend, and then that could signal maybe a possible correction. I'm not saying sell-off, I'm saying a correction. It might correct itself to come back and test this box and then go right back up, right? Okay. So right now, what we got to do is start to dissect like this week, Monday, Tuesday, and Wednesday. So you see Monday, that big bullish candle. Can we identify where 50% of that candle is? Opening volume, closing volume. Let's just start to acknowledge where is exactly 50%. It's right there. I draw a yellow line just in case it comes back in there. I can also draw a point of control of that as well, but we're nowhere near this right now, so I kind of don't want to entertain that right now. Next day again, we pushed up, and I can figure out where 50% of yesterday's volume was. Okay, I can either just cut it in half where I think it's 50%. If you can't do that and you have time to do a proper analysis, grab your Fibonacci tool and don't be guessing, figure out exactly where it is, okay? So that's 50% of yesterday's volume. You see, we have not even came down to touch it. We haven't touched these. So now let's look at today's candle. So today, look at it. Like I'm zooming in, okay? So you can see yesterday, here's a point of interest. We opened yesterday. It was initially bearish. It came down. Again, the buyers bought that discounted pullback, brought it back to the opening price, drove it, took out the previous high, new all-time high, drove. That's the highest point yesterday, 39.90, just right below that psychological 4,000, came down. They closed it right here. Here's where we closed, and there's our opening price today, right there. Clean transition, no gap up, no gap downs. So you can see that there's a tiny wick. So it's not technically an ignited daily bar. There is a little bit of a wick. So as soon as it opened today, there was a little bit of drawdown. There's the tail, wick, shadow, whatever you want to call it. I use a purple line to acknowledge it. So I see today's low price was 3,982, and right away it just came right back to the opening price and just started to drive, okay? So you see how my yellow line right here at the opening price is so close to the low. What I'm going to do is I'm going to just manipulate my own yellow line, and I'm just going to move it up towards the previous all-time high yesterday, okay? Because this 39.90 was previous resistance. It's fresh in the market. All of the volume is above us right now, but if it ever comes back down, let's say today something they announce, I don't know, the government's open up and gold is selling, and maybe it comes right back down there and it stops there because this was yesterday's resistance. It could be today's support. And then if I see that it stops there at 39.90, then I know that these initial buyers that bought today's volume and bought the dip, they are protecting it from coming all the way down and flipping the candle bearish. Do you guys understand this? You got to understand this, okay? I know it's a daily candle, but if you understand what I'm explaining right here in this little location, if you guys understand this, then you're going to understand when it comes to scalping 1 5-minute candles, anything. This little zone right here, do you guys understand what I just explained there? I know for some of you guys it's going to go over your head and you're going to not know what I just said there. But if you understand this, then you'll understand why whoever opened today's body and bought that pullback were very strong. So maybe they want to protect their opening position, right? Guys, it's very technical. If you understand that, you're well on your way to be an amazing technical trader, okay? Because you gotta, like, let's just say you and I, right? Let's say all of us, we bought today's opening price, right? And we're all the way, we're big in the money, right? And then if it comes all the way down, all the way down, all the way down, all the way down, let's say all of us, we put, protective orders right back there at yesterday's high, which is support, because we bought all down here. So we want to protect our original buy location. So we put another, it's called positional trading. So we add another position right there so that the candle doesn't flip. Because you guys know, if this comes in, takes out, absorbs the opening volume, look how small the wick is. This could turn into a shooting star candle, and then that's it. The shooting star candle will start to come down and test 50% of this. It'll probably break that. Then it will come down and test the opening location of this bar. If those opening buyers from this day are not protecting that position, then sellers will continue to fill the previous wick and keep dropping, right? And then that's where you'll see how momentum switches and reversals happen in the market. But right now, you can see that all buyers are protecting all positions. It keeps moving, higher lows, higher lows, higher lows. Here they're protecting opening balances. 50% hasn't been tapped into. This pullback, you see they came in right away. They didn't even let it come down there because they're protecting the positions. So they're continuing to drive. So good. If you guys understand that, well done. I'll do also a webinar maybe to break that down a little further. But we came up, so look at it. Now it's just breaking through. There's no resistance, you know, like above us, because this is all-time high territory. So it's just discovering new price levels. It's wherever the buyers want to take it, and you know, wherever the sellers want to also short it down. But it looks like they're getting squeezed every day. They want to sell it, like they tried to sell it here, tried to sell it here, tried to sell it there, tried to sell it here. Opening balance, they tried to sell it there. Here they tried to sell it. Today, when it opened, they tried to sell it. But right now, there's a wick on it. They're trying to sell it again right now. But if buyers keep asking to trade up here, they're going to continuously squeeze these short sellers and continue driving it to new all-time highs. Okay, so let's just follow today's daily volume. We opened, small wick, came, broke out, bullish, 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 bullish. That is a new all-time high. Right there, it's a new daily high. Look at the psychological number, 4,049,050. Okay, so that's why when we had that buy order at 4,040 coming up there, 100 pip move, pip and dip. Grab your pips, go to break even, scale out, because it came right to that psychological location. Okay, so that I'm going to place an orange line up there because that is our new all-time high. And right now there is a little bit of sellers pushing it right back down to, I can see the price is 4,037. There's probably a double top on the 5 minutes, I'm assuming. Came right up there, coming all the way back down. So, you know, it's coming right deep right into there. There's a little fair value gap, 50% of that bullish candle. This is where if these buyers right here on this 5 minute candle are protecting their position, they're going to start to bring it right back up. Okay, but we got to look for double tops here at the all-time high. It might come up and be a lower high and continue pushing down unless these buyers can come up. So let's just go back to that daily. So daily is continuing to drive. There's a little bit of a wick, right, representing. But what happens if we come back up to the all-time high and continue to break out? Okay, one location is that 4,075. Make sure you mark these $25 increments. 4,075. Next one, 4,100, right? And then you go 4,125. 4,150, and you can continue to go up the ladder. Depending on what type of trader you are, like if I'm a 5 minute trader, I'm going from 4,050 to maybe 4,055, a $5 increment move. If I'm maybe a 15, 30 minute, 1 hour trader, maybe I go in $10 increments from 4,050 to 4,060, maybe to 4,070, right? So you gotta pick your time. Your time frame, and know, like if I'm a 5 minute trader, yes, I want 200 pips as well, like just like anybody. But I got to understand when I'm trading 5 minute candles, it might come up nice, 50 pips, and then scale back down and then go back up another 50 pips. Okay, so I pip and dip at those levels because I'm a scalper. But if I was more of a hourly or a swing trader, then I open up my psychological areas. I'm not looking for just $5 moves. I'm looking for maybe these $25 moves, right, for 250 pips. Okay, but it's longer duration holds because I'm on a higher time frame. Okay, so right now we had that all of this volume. So now just the current volume in this candle. I know there's 10 hours to go before this candle officially closes, but we can still determine 50% of the current volume. And I know it's moving while I'm plotting this, so it's not like finalized with a candle that's officially closed, but right there, that current volume, opening volume, and where I just plotted it, right there, 4,010 is 50% of today's bullish volume currently in the candle. I can also find today's current point of control right there. And then I can utilize this for this session, continuing to trade to see if it maintains this. Like if it comes all the way down, let's say the sellers managed to push it all the way down in here. This is where maybe the buyers around 4,000, 4,010, 4,015 might push it right back up. But if the sellers manage to push this location down, then you can see we're down here. And then the last bit is coming down to that where the original buyers opened it up in that strong location. And then this will be the big fight for the buyers and sellers to see who can take control of the opening balance of this bar. Again, if this was a 5-minute candle, I would be doing the same thing. But this is a daily candle, okay? So that's what it looks like right now. You know, again, I'm going to show you this RSI. I like to call this indicator, RSI, a really silly indicator, because look at how much false signals it's giving. It's been overbought since early September. We're almost going into, look, we're in the mid-October almost, and it is over 1 month being overbought. You know, this traditionally tells us we should be selling, and if we sold all of these highs, you know, and we didn't know how to pip and dip, we would have got our accounts ruined right now, probably blown accounts. Okay, so you can't always use this indicator and always sell. What I always learned when I was learning this was, after I learned what it was properly, was you don't just always sell when it's above 70, and you don't just always buy when it's below 30. Anything above 70 to 100 is how it oscillates. This is an area of strength. Anything above 70, yes, it's overbought. It's overbought for a reason, because buyers are buying it and it's very strong. But this thing can continue to stay overbought for multiple months and never even retrace back down, okay? Especially with everything that's going on around the world. I've seen gold back in 2013 was overbought for half a year, and it never even retraced down. And I remember that time it burned a lot of short sellers. So kind of going through it again. That's why, guys, if you have experience in the markets, you're going to see something and you got to kind of learn from it, memorize it, because you might see it again down the road. So that's the beauty of trading. The more experience you have in the markets, the more you're going to learn. Then when you see this, you're always going to tell yourself, oh, I've seen this before. I know this. I know how to, you know, trade this or react to this. But guys, trading is all about experience. The more experience you have in these markets, obviously you're going to make mistakes while you're learning, and you know, it doesn't matter. I know traders that are in the markets for 5, 10, 15 years and they still haven't figured it out. So just because you have experience doesn't mean you're going to be a profitable trader. You still have to have experience, but you got to learn technicals, fundamentals, psychology, risk management. You got to put it all together, right? I know a lot of great traders who have a lot of experience, but they don't have good risk management, and they're still struggling after all of these years because they can't put it together. So, you know, if you're just starting out right now, we want to teach you the proper way of doing this. So we've got a strong daily candle. We've already marked up a few zones. Let's go now break this daily candle down, dissect it, go into now 4 hours. So we're going to see 4-hour increments. So look at the 4-hour candles starting Tuesday, 6 p.m. That's when the market opens up. Big strong candle. Again, you can see a 4-hour candle has the same characteristics. It opened, small pullback, opening balance protected. Look, it closed 99% right near the high. You had an open. It didn't pop that wick right away. They kind of put it in drawdown. They came down. Again, above 50%, shallow pullback came, small wick on a 4-hour. Pop the wick and drive, okay? So for 4-hour traders, same shit. You got to learn your technicals of a candlestick. All candlesticks have the same characteristics. So you can see this candlestick is a 4-hour. It's not a daily. It's got a short wick, shallow pullback. There's your pop and drive. If this was a 5-minute candle, it would be the same exact shit. So that's why once you learn the candlestick characteristics, you pick the time frame that's suitable to your trading. If you don't like the fast and the furious, get off of the low time frame. Stop worrying about the 1 minute, 3 minute, 5 minute, 15-minute candles. If it's too fast, too furious for you, slow the market down. You have the ability to slow it down yourself. Go to a 1 hour, go to a 2 hour, go to a 4 hour, go to a daily. You know, you do not have to trade those 5-minute aggressive candles, okay? Unless you know what you're doing. You have to have that mentality and that mindset to get in and get out. And, you know, if you go up 20, 30 pips as a scalper, you got to have that ability to go straight to a break even, because next candle could come right back down and not only take your break even, take your stop loss out. And then you have a loss where you could have prevented that. Also, if you go up 30 pips in a scalp, you got to have the ability to know, close that trade, get your money, or go take out partials, right? You got to understand this. Every time frame has specific rules of trading. If you're not a scalper, don't force yourself to be a scalper. You got to have it within you. I've been trying to say this for 6 years now. But if you're not a scalper, we can figure out what works for you. You got to figure it out. It's kind of like your personality too. Some traders are more laid back. They don't want, you know, they want to do some charting, have a beer, and relax, and just watch the charts over the days, you know, and wait for the market to come to them and hold trades for multiple days, right? So if that's your style, that's perfect. That's if you've got a busy schedule and you're working and you got family, I would highly recommend you swing trade. But some people with busy schedules enjoy scalping because they can get in the markets for 2 hours, hopefully hit their daily goal, and they're done. And then they're back to work, or they're back with, you know, they can manage it. So again, everyone is different, but it comes down to you as a person. You got to figure that out. I figured out what works for me. I enjoy scalping Forex and futures, but and I love scalping the stock market, but I'm more of a swing trader and investor in the stock markets. I don't necessarily swing trade Forex or invest in Forex, right? I kind of scalp the markets, make my profits, and move those profits into the stock markets for longer duration holds on real sound securities like Nvidia, Apple, AMD, right? Like those big name where I can hold them and I can sleep at night like a baby and just collect dividends on them, passive income. I know that Apple is going to continue to appreciate. I've been holding it since 2008. It's just been going up since then with forward stock splits, and you just continue to compound your account. These are not I don't think Apple or Nvidia is going to go bankrupt overnight. So I have a majority of my retirement savings in those securities, right? And that's how I want your mindset to work, guys. But it takes years and years to develop that type of mindset. But you're well on your way when you're learning. But look at that. Nice big 4-hour candle came up. So this is 10 p.m. to 2 a.m. Made a high, closed. Came, opened. Some small drawdown on that 4-hour candle. You can see it didn't come into our daily zone. Remember, this was representing 50% of that current volume. We still haven't transacted in here, okay? It came close, but the buyers brought it right back up, took out that, and look now, okay? So this is where I ask questions, okay? And I'm going to explain this, okay? And you guys might think I'm crazy. That's fine. I've been called crazy before, but I don't give a shit. I know that the markets are rigged. I know that the market makers are all corrupt, okay? And again, if I get shut from YouTube for saying this shit, guys, Dave and I are here with you guys every single day, okay? I just want to make this clear for everybody to understand this. If YouTube shuts us down, it's YouTube shut us down. We're not leaving you guys. We love to be here. We've been here every single day for the past 6 years with you guys, day in and day out, working hard with you guys. But if we do get shut down, it's not because I chose to just, stop with YouTube. We're shut down for a reason, okay? Why? Because we're going to expose shit right now, okay? So look at this. You tell me, even if this was your first day trading, how the fuck is this possible? How? Tell me, okay? Look at this bullish 4-hour candle. Look at the high right there, okay? You're talking like pennies, right? When we're talking real, like if we're talking dollar amount, we're talking pennies here. That's the high. Look at the wick, okay? Tell me, how did this new 4-hour candle open? And look, it just opened and but is that by chance or by luck that it has that equal high on a 4-hour candle where it couldn't even break? Like if we measure the entire range of this last 4-hour candle from that bottom wick all the way to the top wick, that is $28. That's 280 pips, right? You're telling me all of that volume, when that 4-hour candle closed, that when this one opened, it could, look at the size of the wick now, okay? 280 pips, and that wick is 30 pips? No, 30 cents, okay? It's not even 30 pips. My apologies. 4,049 and 10 cents, 4,049 and 47. That is 30 cents, okay? Not even 30 pips. That's 3 pips. And this candle opened, a new 4-hour candle, and it couldn't pop that wick to drive. Bullshit, okay? That is manipulation at its finest, okay? And look at now how they stopped it from making a new high or a new all-time high in this situation. Please, guys, learn this, because if you're learning candlestick characteristics, this is going to take you to the next level right now. You guys are getting I don't even know if some mentors can even explain this to you guys, because I don't even think they know what this means, okay? So we're giving you something here. I hope you guys utilize this, because this changed my life when I figured this shit out. And how did I figure it out? All by myself, just by staring at these things and ask myself, how the fuck did that candle not open up and just continue driving? Because it's all bullshit. They've now shut it down. You know, when you shut it down, they shut it down. That's it. There's nothing you can do. They decided right now, this is the highest point so far. And look at it. It's coming down bearish, 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 all the way down there. So you see what I was talking about, opening balance? They're still protecting. Buyers came in. So we got a higher low so far, but they're going to push it up against all of this bearish volume, take it all the way back there. And if they just get it all the way back to that opening balance, I'm sure that they can take out 30 cents and pop it for a new all-time high and continue driving. But right now, 4-hour candle has shut the door. So this is now sessions. This 4-hour candle represents Europe, 2 to 6 a.m. This candle where they just shut it down is pre-New York, 6 to 10 a.m. So this is going to represent COMEX. This is going to represent a little bit of Wall Street. Pre-New York right now, will it come back up? So zones that we got to know is right here, or points of interest. That was where a 4-hour candle closed. That's where Europe opened. I use white lines now to represent anything on a 4-hour. So I can see that they came down, higher low here at 4,033, and there's a little bit of a wick. Will the sellers come all the way back down, take out the low, and transact down at the opening balance? We'll see today if they can get down there. But right now, okay, or we're going to get some consolidation now. You see from this orange line to this white line, you know when I trap volume, can we trap some 4-hour? Is this going to be a 4-hour flag where it just trades inside here now, where it goes up, comes down, might go back up, come back down? And if it's still flagging in here, remember, a bullish flag pattern has a high probability of continuing to break out as long as it meets all the requirements and continues with like kind of higher lows. But if we kind of break here, maybe we'll fill that wick down there, and then we transact in our bigger green box down in here. That's where maybe we could buy down in there if it comes down there. But I need you guys to understand this, okay? Sorry I spent so much time on this, but when shit happens in live, I gotta explain it, okay? I could do this with a webinar, no problem, but this is live education. If you guys don't understand this, please rewind the video after the call and learn what I said here, okay? So that's what's going on the 4 hours right now. If we go to like our RSI indicator, RSI on the 4-hour is completely overbought as well, and it was overbought when it was making higher highs and higher highs and higher highs and all-time highs. And now you see this big 4-hour candle that's coming down has just cooled the RSI from 84 down to 79. It is still overbought. It could just do what this thing did, that little drop, and continue driving. So it could come down, find some support, and continue to drive back up, okay? So it's still strong. This is a little shallow pullback. It's bigger moves, right? Because a lot of pips are involved here. So if we go to the 1 hour, like if you're a 1-hour trader, it's the same thing. There was your big, strong 1-hour candle at 5 a.m., closed right there. Your new 1-hour candle, momentum, transition. How many times have we been on these calls where we're in a buy, going into where an hour is closing, we're in profit, life is good, and then all of a sudden the next hourly candle just opens just like this and boom, comes right back down. That happened to me during COMEX, where I was in a buy, I was up 35 pips in profit, and COMEX opened up, it was just a bearish ignited candle and just dropped. Was that just by chance that just happened? You got to understand when you're trading, are you going into a new hour? Are you going into a new 4 hour? Are you going into an exchange open? That's why sometimes I don't like being in trades, going into COMEX, going into Wall Street, being in a trade, going into when London opens up, all of those things, because anything can happen, right? It's out of your control at this point. So look at it. It's a hourly candle, came all the way down, right down there. And now it's going to close in 7 minutes. Will it actually engulf all of the 5 a.m. candle? And are we going to continue coming down? Or will it come back up and test 50% of this hourly candle? So as soon as this hourly candle closes, I'm going to come back and I'm going to do some analysis on this. I want to see, will it fully engulf that previous bar? I want to determine open close of this volume when it closes. I want to figure out where 50% of this is. I want to figure out where 50% of this bearish point of control is so I can stretch it in the future, because I know that the next hour buyers could buy it right back up. But if these sellers are for real coming out of that 4 hour, then I'm sure that they want to protect their point of control right here and maybe have a lower high and continue pushing it down. If the buyers come back up and take it above the point of control of this candle, then maybe they have enough momentum to drive it back up to the all-time high and continue breaking it out, okay? And let's look at some key hourly zones. So that's what we got to watch for in the next 6 minutes, where this body will officially close. So right now it is bearish engulfing so far. Will it engulf? We'll find out in 6 more minutes. So if we go to the 5 minutes, okay, this is what we got going on. 5 minutes. There was right here, there was a little 5-minute resistance right there at that 4,040. Remember, we gave you guys that buy signal right there at 543 it was. 543, okay? Looking for a buy on gold at above 4,040. If it dipped down 35, you get a better discount. But 4,040, this is how it looked, exactly with that red line. And we're looking for buys and a nice little short squeeze above. So when we look at the charts, there's where it kind of closed. Again, guys, exactly what I just talked about, okay? Look at the preceding 5-minute candle, 540. It opened, came down, where? Into 50% right there, picked it up, filled, and look at closed above that range and closed 95, 99% near the high. There it is. So open, small pullback, short wick, pop, and drive. Just like I showed you on a daily candle. I showed you how it looked on a 4-hour candle. Showed you how it looks on an hourly candle. This is how it looks on a 5-minute candle, okay? And look at where it came right up, right up, right up to the psychological area, 4,050. Guys, we can eliminate guesswork in trading. If you understand psychological levels, if you understand your technicals, and you trade accordingly to these without guessing or getting greedy. Yes, when it comes up to there, I know, I'm a trader just like you. When it comes up there and I'm up 100 pips, I want 200. Believe me, I want 300. I want 500. I want to retire off of this trade, But reality sets in and it doesn't work like that. I figured that out early when I was really young in trading, because I thought I was going to get rich quick. I thought I would take this buy here and I would be retired by the end of the day. It didn't happen, okay? And look what happens. That was a beautiful trade, 100 pips with 0 drawdown, and you don't do anything. Look it, the market retraces right back down and teaches you a lesson, how greedy you are. And then if you don't also go to a break even, it's coming after your stop loss, okay? And that is a huge psychological shift in your trading. This could affect you and you could go into a slump for multiple days or weeks. This could be discouraging. This is demoralizing when shit like this happens. So the way how we prevent this from happening is by being very disciplined in these markets. Guys, I hope I'm not just talking to myself and you guys are actually listening to what I'm saying, because I know all about this. I don't need to reteach myself this stuff. I've taught myself this very early on when I was younger. I hope I'm, just getting to some of you guys, because some of you guys are just saying, Ron, are we buying? Are we selling? Why is this guy talking so much? I would, if someone taught me this when I was younger, I would go give them a big hug and a kiss, because this is what I struggled with for years. I'm trying to save you guys years of like mental psychology, of wasting money, of losing money. Guys, if I was taught this early on, my life would be completely different. I swear to God on this. I'm telling you how important this shit is. That's why, like, sometimes I don't even care to trade because I know what's more important than just trading a candlestick. This is, I can't even tell you how important this is. And for those that understand this, congratulations. For those that don't understand this, I hope eventually you will understand what I'm saying here. But right now, we have to mark this zone on the 5 minutes. I can see right there. I bring it down to the bodies, right? I can even go a little bit to those bodies because now there's more volume in the markets. And that is one top, okay? So this is where I don't want to get in a debate. Is someone going to debate me on this, that the sellers are here? They are here. They're showing me. They pushed it all the way down there. It all started right here. So let's stretch this into the future. And that is one top, right? It's a V. It's like kind of an upside down V. It came right up there and it came right back down. So right now it's figuring out its neckline right here. It's probably going to come back up. But if it comes back up, it's got to test this resistance. If it comes all the way up there, that could be a double top. We're already, visually looking at it in the future. It could come all the way up there, and yes, it could come all the way right back down. That's a traditional double top, right? But it could also continue to break out. Then it could be a liquidity grab where it impulsively fakes out up there, then drops back down. That's what we also got to look for. And then option 3 is it could break out of there. It could have closed above there. If it closes above there, then we just same zone, make it green. If it closes above there, then we look for maybe a retest in here. This block now becomes demand or support or buyers or however the hell you guys say it. And it could come right back up and go for new all-time highs. You guys have seen it for multiple months now, okay? So I wouldn't be surprised if it continues to break for a new high, pull back and continue driving, okay? But we got to take it one step at a time. Right now, that is a red block above us. It's at that psychological level of 4,050. And right now, this was a previous resistance right here too, okay? But then when it broke above, it turned to support. Right there, it came down, broke that support, closed right at it. It came back up, and now we got volume below it. So this is resistance now. If it comes back up here, it might get rejected there and continue to push down. If we see 5-minute volume maybe close above here, maybe we'll retest this, and we could look for a buy right back up to that red box. And when we're buying back to the red box, you got to understand it could come right to the red box and drop right back down. So that's why when I'm trading, I'm not guessing. I'm taking my ruler. That's why we're going to have this webinar 6 p.m. today, right before the Blue Jays game, guys. Is we're going to learn why this ruler is very important, because I can measure maybe to that body, maybe up to there. I could go right to the and exactly know how many pips I'm looking for. And when it goes there, then I'm very disciplined to follow my rules. Take stop loss, go to break even, scale out. Because if you're in a buy, it's great, we're making money, but we got to understand that could be a double top and they drop it right back down on us. But if it's driving up there and it breaks out, that's fantastic. Then we get more money. That's perfect. But you got to understand what you're trading, right? You got to understand where you can go with your trade. When you get in a car and you got to go somewhere, I'm sure you know where you got to go. When you get in your car, you're either driving your kids to school, you're going to work, you're going to the grocery store, you're doing something. You're not just getting in the car and you're just driving and wherever you go, you go. Maybe there is some people that are crazy like that, but when I get in the car, I know exactly where I'm going. I know from my point A to my point B. I know how I'm getting there. Same with trading. When I take a trade, I know point A and I know where's point B. I don't guess where I'm going to go. It's from here to there. That's it. That's my job. That's my trade. Just like a carpenter, when they're measuring or doing drywall or doing flooring, they don't just guess how much material they need. Maybe they're really good at their job and they can do that all in their head. But most guys, when you call a carpenter at your house, you're going to see he's going to pull out his ruler. He's going to measure your baseboards. He's going to measure your walls. He gets it. He calculates it. And then you can see then he has very little waste when he's done his job, because he knows exactly how much material he needs for his job. Same with trading, guys. We are tradesmen. We need to measure our moves, and we know exactly what we're looking for. When you start to do this and you do this on a daily basis, you're going to just watch your account grow and compound over the time, right? There's going to be days where, yes, you do take losses. It's part of the game. But with proper risk management, you're not blowing up your account. You got to know, if you have a shitty day and you lose 1%, you're done. That's it. You got to go back to the drawing board. You got to get back and see, were you buying this all-time high at 4,050? Maybe you bought up there. Maybe as soon as that candle opened, you FOMO'd and you bought, and now you're in this drawdown. And you haven't learned how to take the loss like a man and get out of the markets. You're now holding in more drawdown. And you know, you're hoping, oh my God, I hope that the buyers can bring it up here to, and then it just keeps going down and down, and then you can't cut your loss. And then now it keeps going down and down, and you've pissed away last week's profits, and you've pissed away 2 weeks of profits. And then now you're adding another buy, double sizing, you're hedge trading, and you're going through all of the wrong mentality of trading. So please, guys, I hope you guys can get out of that and learn from this, okay? So right now, we can see that this location is also now resistance, okay? I don't see any buyers above here or closing above here, so it's continuing to push down. Will it come down to this white line? This white line is a 4-hour line, so this line is much stronger than just trading in this no man's land over here, okay? It could find some 5-minute support right here, just like there was a body. There's a wick there, a couple bodies there, a wick there. Maybe it might find some support here, but there will be maybe better support here at this white line because it's a 4-hour support line, just as opposed to this 5-minute red line right here. So maybe we got to let it come down here and see, maybe are the buyers here. If this breaks, the only other break was right there. When it dropped down there, that's where it stopped. It pivoted and came right back up, okay? So you see how I'm just marking my zones right now? Now what I can do is, now you can see a little bit of a pattern. Does this not look to you like this is a consolidated shitty area right here? I make it neutral, extend it into the future. We're in this consolidated shitty area again. So does that not look like a head and shoulder pattern? What that is this garbage area is your left shoulder. Let me change the color of this arrow, guys. I apologize. What color is good for you guys when I use this pathway arrow? Yellow. Let's do this. Okay. So what I want to show you guys here is when we do this, here's your left shoulder. There's your head that broke out. Okay. There's your just dump, come right back down, and look at where we're right back in. We're in this consolidated zone where it was left shoulder. Now this is the right shoulder, okay? It's got, these patterns have a high probability, a head and shoulder pattern, of continuing to move to the downside, correct? But, you know, patterns are just patterns. That doesn't mean 100%, but we could see buyers bring it right back up here and close it, and then I make this green. This might become support, and then all of a sudden we're pushing right back up there. Then when it gets up there, we have to understand that that could be the double top, and then they really drop it down with that big, powerful leg, okay? So I like this arrow, guys. You guys can see that. I can even maybe bring it forward. Visual order, bring to front. Okay, so it's good, guys. You guys understand that that could be a possible pathway, okay? Kind of like a GPS showing us where we can go. But right now, we got to continue to watch this. Right now, it's pushing down. Let's see. I see a wick, a wick, a wick, a wick, and a wick. Do we have any closing black volume below here? We do not as of yet, right? So it's been just fake outs. So let's see one more time. If they fake it out and bring it inside the zone, you're welcome to trade in here if you want. But I would rather wait up here, or maybe at this white line, to entertain maybe a trade, okay? So what we can do in the meantime is add our daily bar indicator, so we know what is the daily volume, how did it start. Remember, it opened, small strong, you know, wick right away. It was almost an ignited daily bar, and buyers pushing all day today, where we just hit that all-time high right there. I showed you guys how this shit happened from 6 a.m. You 4-hour transition right at that psychological level. You think it was just by chance that it just moved to 6 a.m. right to 4,050? Come on, guys. We're all adults here. This wasn't just by luck. This is all pre-programmed. It's all happening behind the scenes, whether we like it or not, okay? So just get to learn how the markets move. This is how we can beat the market makers at their own game, okay? So I hope we're learning how to do this. We can eliminate the guesswork out of this. A lot of top traders aren't guessing. I know it's hard to believe, but we kind of show you this on a daily basis, that we're not guessing where things go. Okay, we're pretty good at what we do. Some days are tough days, I admit. Some days are really, really difficult. But those are where you got to learn discipline to maybe stop trading that day. You got to know to walk away. You know how long it took me to learn how to just walk away? Oh my God. That was probably one of the hardest things I've ever learned, but it was probably the best thing I've ever learned, was just to walk away. Like if the volume is going to trade like this, I know that I'm just going to get frustrated trading this. I'll either buy or sell, I'll get frustrated, but then I want to trade days where it's like this, where it's nice like this. You could just buy pullbacks, make money, buy pullbacks, make money, buy a pullback, make money. But when it gets into this is frustrating. This will annoy us. This will piss us off. We're going to make some mistakes here. We're going to revenge trade. And then when we start losing, we can't walk away, because now that psychology, those emotions take over. So right now, it's kind of in this zone, consolidating. You know, you can even bring it backwards here. See, when it came in, came down, came back in, sideways, 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 and then kind of officially broke out, came back in. So let's see if the buyers now can bring it right back up, or if sellers can bring it down through here, okay? So we'll watch gold for a little bit, guys. Does this kind of help you guys? Do you guys have any questions on Zoom? Do you guys have any questions? Later today, 6 p.m., guys, so right over here, we have scheduled the webinar on TradingView tools. I'm going to teach you guys exactly that, what I use, the pathway, rulers, Fibonacci. I have to change this time. It's scheduled for 7, but I'm going to make it 6 because the Blue Jays lost last night. They were up 6-1, and they blew that. Oh, my God. That was horrible watching that. They could have clinched and wrapped it up and been now on resting, but they lost, okay? So shout outs to the Yankees. Aaron Judge hit that 3-run homer right off the foul pole. So they play at 7:15, so I kind of want to watch that game. So we'll come in at 6, we'll go to about 7:30, and we'll learn all about TradingView, Toolbox, and indicators, okay? It will be live with you guys. I'll have the Zoom link. If you can't make it, it'll be uploaded and on the website, okay? And we're going to learn all about this. This is my toolbox. Hopefully you guys have your toolbox in trading. You have your favorite tools in there. And, you know, when you have your tools that you know how to use, you become like a pro with these tools, you're going to make your trading so much easier, okay? So right now, guys, are you guys in any trade right now? Are you guys looking at anything on gold? Are you guys looking to buy a dip? Or are you guys scared now because you see some bearish candles? Be honest. Let's all be honest. Are you guys scared that it's going to continue to drop more, or it's a good time to buy? If you're looking at it as a discount perspective, let's just talk, you know, if we were shopping at the mall. If something was $4,050 and now it's $4,030, that's a $20 discount, right? If there was a pair of shoes on sale for 20 bucks, you'd probably buy it. If you believe in gold, you're getting a substantial discount. Think about these buyers that bought up here. Think about these buyers that bought here, these buyers that bought here, these buyers that bought here. They're all in drawdown or they've been stopped out of the market, okay? So if you like a discounted buy, test it out, right? But utilize a size that if it comes back down just a little bit, you're not panicking. You're not going crazy, right? Use when you're trading in this kind of zone here, this is where you can use feeler trades. Test it out, whether you're buying or selling, you know, because the market can come up, it can go down, it can continue to accumulate without you getting emotionally involved and stressing out and just watching what happens. But right now, if we break this down, let's just take a look. Okay, so it came down here, bullish candle came all the way back up. They pushed it down, okay? So I can see some resistance on the 5 minutes right here. And then again, the sellers pushed it all the way. That was a big bearish candle that came down, almost closed down there, but remember, it's a 5 minute candle. Buyers brought it right back up. It's a hanging man candle. It came back down, right down there. Look at the points of interest, the body and body. I can place all these red lines, guys, but I don't want to confuse you guys. But look, there's a body, and then that wick. And then it came and closed, and now we're getting momentum off of that rejection wick coming in this next candle, okay? So it's either we got to see it break, like even an impulse break will create a higher high, and then we'll get it right back up to this zone here. We got to also see, will blue volume close above here in order to continue to break out of there, because it's failed there, and it just failed right now on this candle with 2 minutes to go. Okay, one thing I want to do is go back to the hourly, because the hourly candle did close. So remember what I wanted to say? I wanted to do some analysis on that 1 hour candle. So now this 6 a.m. candle, we can see that bullshit manipulation right there. It came down, and look where it closed, right there. So it did not technically bearish engulf all of that blue body. You know, it didn't swallow it. It didn't engulf it, right? It came up there. So you got to give a little bit still, tiny benefit to the buyers that still closed it inside there, and the sellers did not close it all the way below. So now what I do is I want to know where's the point of control of that hourly candle. It's bearish candle, so I grab my fib tool from the opening balance and bring it down to the closing balance right there. There's exactly 0.5. So I'll place a white line. Anything I do on an hour or 4 hour, I place a white line, okay? I can do my bearish point of control of that hourly candle. It might be too much. You know, when I go down to the 5 minutes and you see all these red boxes, you're probably going to be like, what the hell are all these zones, okay? But I'll explain it to you, okay? So right there is the point of control of that hourly bearish volume stretched into the future. Are we going to come back and trade in there and go back down, or the buyer's going to bring it above there, okay? So when I go on to the 5 minutes now, you see I have a lot of red zones. That's what I was going to say. It might confuse you. But, right, that's the hourly one, right? That's the big one, the 5 minute one, okay? So what we can do is, you know, I can move this one back for now, right? And then I can bring it in the future if we're getting up there. Like this one I can also bring back for now, but we got to kind of watch what's going on here, okay? We're still trading in this zone. We're not even up here. We're not even up there to entertain that, okay? But we know that those blocks are in the market, and this one is from the hourly one. This one we'll place more emphasis on. That's the all-time high zone. But right now, you see, did the buyers even get it to close above that red line? No, they failed. It came back down. There's a little bit of blue volume. That body engulfed that previous body. But this is where it's kind of trading in no man's land. So sometimes when you see a bullish engulfing candle, there's context. Where is it produced? Like it's, you know, this one is a stronger because it was produced at the bottom and came up, right? This one is just kind of in the middle. So if you see hammer candles, you see bullish engulfing candles, they don't hold as much value or context. It depends where they're developed, okay? So you can still see we're just consolidating still inside here. Still building, not the greatest to be trading in here. We'll get to NASDAQ, we'll get to US 30, everything. We still have another hour to go before we even hit COMEX. How's everyone doing? We got 400 viewers on the call, guys. Thank you. If you guys can hit the like button, subscribe to the channel if you haven't. If you want to learn with us on a daily basis, thank you, guys. Let's get this up to 86,300, 2 more subs away. And I apologize, guys. Wow, we got right into this and I didn't even say good morning to everybody. Conrad, welcome. Nigel, good morning. Mikey, DCY. Nice, DCY. Good trading. Michael, welcome. Chris, welcome, guys. Bridge, Zizi, welcome. Welcome, guys. Bence, good morning. Chris, welcome. Welcome, guys. Ferdinand, good morning. Welcome, guys. And everyone on YouTube, thank you guys for showing up as well. We appreciate you guys. Welcome, guys, from the top. First one, who is it? Trading Upwards, welcome. Thank you for joining. Doomslayer, welcome. Zablon, thank you for joining again. You had a great day yesterday in the markets. Thank you for coming back. Online Cinema, welcome, guys. Rise and Drive, good morning, guys. Everyone, welcome. Good morning. Gold is kind of consolidating in here. Do you guys mind if I read a blog on trading in a slump? This is pertaining to myself. And maybe if some of you guys have ever been in a slump before, maybe this could help you. Maybe some of you guys are in a slump right now. I hope not, but you know, we got to be real with each other. Maybe some of you guys are struggling and can't seem to get out of it. I can offer some advice to help you guys out. Maybe when you hear me talking about it, because I went through it, okay? Guys, I just want to really quickly talk. I was like, last 2 weeks, okay? 2 weeks Sunday was my wife's aunt had a brain aneurysm, and she was on life support. So every single day we were in the hospital with her. They wanted to take her off life support. We held her on. We paid all the finances, everything. We didn't. Money doesn't mean anything. When you got a loved one on life support, money doesn't mean anything. I'll tell you, if you're my best friend and something happened, I don't give a shit how much it costs. No one is pulling that plug until you officially are gone yourself. That's how we do it in our culture. But we were under a lot of stress. She passed away, unfortunately, but I was trying to come back in the markets and trade with you guys with that in my head. And you guys see, really, like I took 4 trades. I think 4 trades all hit stop loss. They could have been break even. I wasn't even thinking to go to break even. Just everything. I was emotionally drained. I'm not making excuses, but shit like this happens in life of a trader. You're going to maybe go through something like this in your lifetime, right? It happens, but it can really affect your trading. It really, really affected my trading. That's why I said, guys, I need to take a break. I thought I was ready to come back into the markets. Obviously, I wasn't. I wasn't ready to come back. So it really affected me. It put me in a little bit of a slump. But yesterday's call got me out of it. Like I waited patiently all day. I didn't even take a trade on gold. I could have taken a couple, but I waited for US 30 in Wall Street. Why? Because I'm more comfortable trading US 30. I don't normally trade gold, guys. I'm always, if you catch me trading by myself, I'm trading US 30. One security, I'm very confident with US 30. I know how it moves. I've been trading it for a long, long time. Gold is nice security too, but it's very erratic. You got to know how this thing moves in order to master gold. You got to utilize a bigger stop loss and things like that. You got to deleverage yourself. So yesterday, guys, if out of all of my 6 years streaming here live on YouTube, I'm proud of yesterday's call. Why? Not just because I hit a trade and it went 100 pips with no drawdown. I don't care about that. It's coming out of a slump that I'm very proud of. I put a lot of pressure on myself yesterday to wait patiently, to look for a good A+ setup. We found it we started the call at 6 a.m. and we found the trade at 9:45. Okay, it was right at the end of the call, 15 minutes into Wall Street. It was that sell. We waited for it to come up and it hit that red line where we said if you're in buys, you should do something up there. And that's where the sellers were waiting, and that's where it came down. So if you guys can, you know, when people, you remember Michael Jordan, or you remember like your favorite athlete, there's one game that always sticks in the head. My game with Michael Jordan was against Utah Jazz in the playoffs, where he crossed over and hit the game-winning shot. I have like a poster of it. I'll never forget that. Everything Michael Jordan did, that sticks to me. You know, like Kobe Bryant had his, you know, you might think of Joe Carter in the 90s when he hit that 2-run home run to win the World Series. Like everything Joe Carter did, that kind of sticks, that moment. So with me, guys, if you guys remember the moment with me, it's how I recovered from being in a slump with the 4 trades that I took that hit, and I came back after everything, overcame everything, all the adversity, all of that, and hit a good trade. By being disciplined, by not trading on emotions, by blocking everything out, and that's how I kind of, hey guys, that's how you got to take trading. You know, it's very difficult. Okay, trading is not easy, but this blog hopefully will help you guys out. Trading in a slump, recovery, and mindset. Okay, so trading slumps are common in the life of a trader. Maybe you're going through it right now. You guys witnessed me going through it last couple weeks. Regardless of their experience level, it doesn't matter if you have 1 year, 5 years, 10 years, 20 years, 50 years trading. There's always, you're going to go through a slump in trading. It doesn't just regards trading. It could be something happens in your personal life. Maybe you have a death in the family. Maybe you get divorced. Maybe you lose a job. All of these things can mentally affect you in your trading. Okay, so that's what we call like a slump in trading, when you take kind of consecutive losses. So these periods are characterized by consecutive losses or underperformance, often leading to frustration, diminished confidence, and impulsive trading making. So we'll talk about a description of how traders might recognize a slump and strategies to return to the rhythm of success. Okay, and even sports players, they all go through. Sports players and sports teams go through slumps as well. I was talking about the Detroit Tigers. They lost 13 games in a row when they were the #1 team in the Major League Baseball, and they found a way to get right back in the playoffs, and they're competing right now to possibly play the Blue Jays in the American League Finals. So they went through a 13-game losing streak. Everyone wrote them off, and they somehow came back and fought their way. So number one, recognizing a trading slump. Okay, so this is like, if you're in this, you're in a slump. Okay, consecutive losses. A trader experienced multiple losing trades in a row, where each trade deviates from their typical strategy out of desperation to recover losses. So this is when you throw your trading strategies, your plan out the window, and now you have no idea what you're doing. You're just buying and selling just to make. How many of us have been through that? And that's not a good plan, guys. If you're doing this, I suggest stop right now. Don't do this. Okay. If you're losing, don't just stick to your strategy. Figure out what strategy works. Don't just start deviating from it and start guessing. You're probably compound the problem and make it worse. Emotional decision making. A trader experiences multiple losing trades in a row, where each trade, right here, the trader starts making trades based on fear or greed instead of data or analysis, perhaps by holding on to losing positions too in hopes of a turnaround. So what I was talking about here, like for example, if these buyers bought up here, maybe they have in their head gold is going to go back up. It's been going up for multiple weeks, multiple months. But if you have that mindset, it's perfect for a large seller to just keep diverging the market away from you. Okay, like let's say these buyers bought right here. They bought this pullback, and they have not been stopped out now. They're still holding and drawdown, holding and drawdown. They see, they look back and say gold always pulls back and makes a new high, pulls back, makes a new high. What happens if this is over now? What happens if gold now really starts to sell off now and you never ever recover, So you're just putting yourself deeper, deeper, deeper into drawdown. There's got to be a time and place where you accept the loss and just take it, and you got to move forward, okay? Because sometimes it won't always come right back up. I used to think that when I was going in drawdown, that it would always come back up. I could hold and hold as long as I had enough capital, and then all I saw was my account get drained, and then I got a margin call, and I lost everything. Okay, so that doesn't work, guys. We like to think that it works, but it doesn't. Going away from your strategy, you guys see I have the same strategy I do every single day. It's the same shit. I do a top-down analysis, I look for levels, and I trade off of those levels. You can see when I was in a slump, I was trading the same strategy. It just wasn't working for me. And yesterday, you saw I was doing the same strategy. I didn't change anything. Today, same strategy. I'm not changing anything. I'm very confident with my strategy. Some days it works, some days it doesn't. But I'm not now second guessing myself. I'm not changing the style, the way how I trade. I'm not, I'm not having doubts of the way how I trade. I'm very still confident, even when I take a loss, or even consecutive losses, or if I have a couple losing days, right? I'm not letting those emotions take over. I'm staying disciplined. I just got to be a little bit more. I got to watch my entries, okay? Because when I saw my entries that I was taking on those losses, they were kind of impulse entries. So yesterday I said, guys, I'm waiting for full closures of candles. I'm looking for retests, and I waited and I waited and I waited for that setup. And that kind of boosted my confidence, everything, to know that everything is working. And we're going to continue with this. So deviation from your strategy, abandoning a proven trading plan to try new untested technique due to impatience or pressure to perform. So some of you guys have your own strategies, your own techniques. Some of you guys are ICT traders. Some of you guys are SMC traders. Some of you guys are technical traders. Some of you guys are fundamental traders, all of this thing. Make sure you have your own strategy, your own technique, and you're perfecting it and you stick to it. And you learn from your mistakes. But just because maybe you're an ICT trader, for example, and you had multiple months of consecutive profits, and then all of a sudden you had a bad couple days. That doesn't mean that your strategy of ICT is throw it out the window and start learning something new. It's just maybe you got to tweak it and perfect it and learn from your mistakes what you did wrong and just continue moving forward. It's not that your strategy isn't right. It's maybe you got to just understand that drawdown losses happen. But you got to take your time to get out of it. Self-doubt. The trader questions their abilities and hesitates to execute trades even when they align with their strategy. So sometimes, if you've taken a couple losses and everything is lining up perfect what you look for, you might be hesitant to take that trade. You still got to have that confidence. Even if you have 1 loss, 2 losses, 3 losses, 4 losses, you got to have that confidence to continue. Like, for example, if I see, gold come back up here and then I flip that zone green and then it's gonna, I got to have the confidence to maybe look for that buy again. Even if I've suffered 3 losses, right? I got to stick with my strategy and I got to stick with my plan. You can't let self-doubt take over, because if you do, then you're going to be questioning everything. You're going to be questioning your strategy. You'll be questioning your technique. You'll just be questioning everything. And that's not what we want. You don't want to lose confidence with what you're doing. You got to stay confident, but yet cautious. You got to still be cautious and watch what you're doing. Increased stress and anxiety. Feeling overwhelmed by market volatility and unable to focus clearly on developing an effective trading plan. Okay, so I'm going to take this a little further. Anxiety and stress doesn't just have to come from trading. Anxiety and stress can come from your own personal life, right? I was kind of stressed out with everything that happened with my family. So you see how it kind of affected my trading. Maybe I was too early to come right back in the markets when I wasn't ready. And that was my own fault, and I apologize for that. I should have taken maybe 2 weeks off to completely, go through the morning stages and everything. But I was helping out everyone. I had to be strong for my wife, my kids, her parents, my parents. Her husband has no one, has no kids, has nothing in life here. So he was very depressed. I had to sleep at his house for a couple of nights. He was suicidal. It was just an emotional roller coaster that I went through, that I was helping out other people and I never got the help that I needed, so it was rough. And now trade like a robot, guys. That's why I always say trading mindset, how to have a trader's mindset, like a robotic trading. When we trade these markets, trade like a robot, right? You got to trade like a machine, just like how the markets trade like a machine. You think by chance that they just brought it up here, tweezer top highs at that psychological number and just dumped the market? Everything is robotic. Everything is high frequency. It's all robotic. Bots are trading now. Humans don't even trade anymore. If you go to New York Stock Exchange or the Chicago Stock Exchange, you won't even see a human on the floor. You're going to see just computers, robotics, and that's what's doing all of the trading right now. So we have to mimic that, guys. That the reason why I love trading like a robot, when I say that, is I eliminate all emotions out of my trading. If my trade goes right up to there, I trade like a robot. Stop loss, break even, scale out 80%, leave 20% running. Same thing. I do it over and over and over. And you see when I deviate from that, when I go up 30, 40 pips and I don't bring my stop loss to break even, you guys see what happens. Then the trade can come down. If I don't have, when I was in that slump, I wasn't doing that. And it came where it should have been a break-even trade, but I didn't, and then it hit my stop loss. So when I go back and reflect on that, when I was looking back at that, I'm saying I didn't even stick to my own trading plan. Why? Why was I doing that? What caused me to do that? So, you gotta stay very disciplined, day in and day out, every single day in trading. Then you eliminate all emotions. Once you do that, you're well on your way to success in the markets. Okay, guys? So we're continuing right shoulder breaking down, but I see a wick, a wick. Let's see if we get kind of a first black candle closing below this zone, okay? That doesn't mean we're just going to go into a sell, but let's just see for technicals if we see a first bearish candle closing below here, okay? And let me just continue reading this. So what are some strategies to overcome a trading slump? Okay, number one, self-reflection and analysis. Okay, this is important. Conduct a comprehensive review of recent trades to identify patterns or errors without placing blame. Use data analysis tools to understand what went wrong and why. I hope that you guys are journaling. I know when I say this, everyone is unsubscribing and getting off the channel, but journaling is very important, okay? When I look back at my journal now in that slump, I have my emotions. I have written down, there was a death in the family. I rushed the markets too soon. I didn't trade according to my plans. I should not have been trading. All of these things. Now in the future, if I ever go through another situation like that, I know how to handle it. Okay, you learn from experience. You learn from mistakes that you make. Same with trading, guys. That's how you have to learn. If you really want to learn to do this, not just today, but for years to come, you got to start somewhere. And you got to, I'm telling you guys, I've been doing this for over 20 years. And if I could learn all of these mistakes that I did early on, I would be completely different. Unfortunately, I didn't have someone teaching me these things. I had to learn all of these things by myself. So it's not easy. That's why we don't want to just teach you guys technicals and a bearish ignited candlestick closing below here in a retest, okay? Because there's more to trading than just a candlestick. You got to understand how to trade, how to handle your greed. If you guys are making your daily goals, have the ability and the discipline to stop trading and get out of the markets. Why else are you trading if you're hitting your daily goal? Why do you have a daily goal for if you're not adhering to it? What's the point of having a daily goal if you're not respecting it? Then don't have a daily goal, right? We have daily goals because we respect them. When we hit our profit, we want to go on with our life. We want to get out of these markets. If you have daily loss goals, okay, I have that too. If I lose 0.5 to 1% each day, I'm done trading. I'm not losing 2%. I'm not losing 5%. I'm not losing 10%. 1% is my maximum loss. Those days when I lost, that day, the day before when I took those 2 gold trades when I couldn't continue, I lost 1%. Normally I break my 1% down in five trades, 0.2. I didn't do it on that day. Each one of those trades were 0.5%. I hit my 1%. I couldn't even continue. I was done. I apologize to you guys, but I'm very disciplined with my trading because I know what can happen. I know how once it unravels, you can go down that hole and you can become, that slump can become very, very serious, okay? So I need you guys to adhere to those rules. So we've got a bearish candle breaking. Let's see if this is going to be the first one that breaks down here and closes, okay? So here's the close. So it officially closed below this red line. First black candle, bearish candle, that's closed below. So will it come back up and retest that as a resistance and go back down? Okay, so that's a possible pathway. But sometimes it will not come and retest right away. Sometimes, you know, candles get a lower high and start pushing right back down without retesting. Okay, so another thing that we got to do is watch if this is going to be a false candle. Because what could happen is it could be a blue candle coming right back up and close back inside here and retest this and go back up. And then we have a false breakout. So it's hard to, you know, this is, sometimes traders want to trade this setup right away, okay? But you got to also understand it could come right back in and close above there. That's why we look for a retest. The reason why we look for a retest is because if it's coming up blue, 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 it's right at 50% of that volume. And I want to see if those sellers are there at that point of control of that candle, the first candle that closed below, to see if they're actually in fact there to hold this volume down. So it's not basically like a fake out candle coming back up and closing back above there to do this. Okay, so you see now how it came up, it got rejected. Now what I look for is it turns into a shooting star. Look at the size of the wick. Okay, because that's all it has to do is finish filling that wick and then start to drive down, and then it will, come down to maybe fill that prior wick right there. But you see when it broke down, it came back up blue. So it came back up. Now it could push back down. So it has a retest confirmed so far, but the body of the candle is not closing in 3 more minutes. So yes, it could produce a new low and then it could come right back up. So that's why if you're selling this, you should always consider placing a stop loss either above the previous body that ignited, or maybe go above these bodies. Some go right above the entire trend or the range up here. But right now it's still holding. It's a shooting star candle coming down. It's been retested coming down. If you want to kind of entertain a sell now, you possibly can. There's 2.5 more minutes to go, so there's still lots of time, but it could continue to come right back up, okay? So I'm going to go into sell, so shooting star. I'm going to go into a sell. I'm going to do this one with a very, very tight stop loss, okay? Normally, I have my stop maybe above there, but this is for like kind of learning purposes. I'm just going to place it right above there, because if the sellers are for real, then they should be holding this red zone. That's why I feel safe, because if they can't hold this red zone, then if it comes up there, the buyers will probably be able to break it out up to that next one. So why do I want to give it any more unnecessary risk if I believe that this zone is going to hold? So that's my maximum stop loss on this trade, okay? It's already in profit, right? But I'm not looking just to scalp for a few pips, okay? So I want to see if it can at least fill down to that previous low right there, to fill that previous wick. And when I see that wick, it's also lined up with, we got some structure with that wick and those ones. So let's see if we can continue to make our way down to this red line. And then that white line is that 4-hour point of interest. So if I'm getting in a sell and it's coming all the way down there, then I have to, in fact, know that I got to be closing my trade there, or going down to a break even, or scaling out 80% down there, okay? So this candle is a bearish pin bar. Remember, it opened, came down, went back up bullish, did the retest, came back down, and pushed for a new low, and the volume is right here hanging like a pin bar. So it's got 60 more seconds to go into the close. So let's see where we get this close. Okay, see, and shit like that happens. That little spike, I can't control that little spike, because when it came down there, it got a big buyer. So I'm going to get stopped out of this, and you'll see why I'll get stopped out, okay? So I just got stopped out right there, okay? And the reason why I got stopped out is because now this candle coming up with 28 seconds is going to possibly be a fake out candle that will close above here. And when you flip this, then it could continue to go back up. So I don't want to give it any more unnecessary risk, right? So I take my loss. I take it like a man. I accept it, but I don't want to take a further loss. I could have kept my stop loss, I told you, above these bodies. I could have kept it all the way up here, but I don't want to play this game in here, because I know when it comes in the zone, look how it kind of engulfed, and now it flipped that zone, so it's a fake out candle, okay? So you see how that candle faked me out, guys, okay? I'm okay to say that. That's what a fake out is, okay? Everything looked clean. It closed below, it opened, it retested, and it came down. So just because, that we always say, look for a break, look for a retest, I'm showing you guys how it's not automatic, how it doesn't always happen. And look, see now how it's squeezing and coming right back up. So when I look at this, I know I took a loss, okay? I admit it, guys. Unsubscribe from the channel, I don't care. I took a loss. But what you didn't realize was how disciplined I was to understand just to place my stop loss just above that bearish body, because I know that this could have happened. And look how much unnecessary pips I prevented myself from taking, okay? And hopefully now, we learn what a fake out is. That is a fake out, okay? I know it presented itself like a good setup where it closed below, it retested and got rejected. And we ask ourselves, well, why didn't it sell all the way down there? Because that's how fake outs happen in the market. But when you understand that, you don't have to give it any more unnecessary room to breathe, right? That candle, as soon as you see when it flipped blue like that, it proved to me. It came down there and grabbed a big order and came right back up and closed, and look at where it's going now. So this is where now the market could potentially start to come back up in reverse. Or the market makers are going to play games with both buyers and sellers here. This is how they accumulate volume. So like, you know, sellers down there, now buyers are buying it right back up. You know, it might close above there and get ready to take off. And then you go in a buy on a confirmation and then they dump it back down, right? So they're in a stage of accumulation. This is why I hate trading these type of zones here, okay? I'm trying to make sure you guys understand this, okay? This is why I say, guys, this zone is the shittiest zone to trade. You see how they fake out, fake out, fake out, fake out, and fake out. Even though that was a good setup, like when we ask, if I was reviewing this in my journal, I asked myself, did a bearish candle close below structure? Yes, it did. Check mark. There it closed below. Did I wait for the candle to open and come back up blue and retest the point of interest, the point of control? It did. And you guys remember it got a wick and rejected and came down. That's when I sold, right? But it just pushed down just for a little bit of pips and then came right back up the last minute without those big buyers and came back in. So this is how the markets trick us. Even though when there's that setup that we look for, you always have to keep in mind that it doesn't always work. This is where traders think, if I just wait patiently for a candle to close above or below zone and I wait for a retest, I'm going to make money. That's not necessarily the case. You got to use also proper risk management. Guys, I only went in with a 0.2 on that trade, so don't get stressed out, okay? I'm not getting stressed out. It was just a 0.2. I had just a stop right there, you know, so the reason why I put my stop there is because I know that what could happen. I could have kept my stop above there. I would have been stopped out. I could have kept my stop above this red line right there. I would have been stopped out. So why give it any unnecessary, like that's an additional 30, 35 pips I didn't give the market, okay? Yes, they stopped me out, but I took the sell down there. I only lost about 15 pips. That's fine. I can find 15 pips, no problem, scalping 1 minute candles anytime, either on gold or US30 later. But you got to learn from this, right? So I know it sucks when it happens, but you got to understand where you're trading. This is why I hate trading this type of volume. I say this day in and day out. I like to trade trending volume that's moving nice. This is all bullshit. This is where they're stressing out the sellers and they're stressing out the buyers. See right there, the buyers were buying, came up there, and then now they're slamming them back down. Okay, so both buyers and sellers are getting frustrated in here. Okay, but we know that the gold is not just going to trade in here all day today. We know that it's eventually going to make an attempt to either break out of this location above or below, depending on who accumulates more inside here. So, you know, if they accumulate more, maybe we might see that move. Sellers might continue pushing this thing down. It might go in that intended direction that I had, but it needed to stop out these grab some liquidity and stop out those orders there. What it just did. See how it came up, took out all those orders, and now it reversed back down. So, you know, sellers could bring this thing back down, close it below there. Then that might be the stronger leg that pushes down. That's why, guys, I tell you guys in situations like this, when you're feeling out the market, use feeler trades, right? That's why it's so useful. It gives you so much information. Like if I took that sell on a feeler sell and I got stopped out, okay, no big deal. A feeler trade for me is I use 0.1s, 10 cents. If I lost 15, 20 pips, it's $1.50, $2 I lost. That's a cup of coffee. But what it tells me is that how the market faked out and maybe to go to the upside. Then when I get confirmations to the upside, then I don't trade with a feeler size anymore. Then I step up my sizing and I could make that little tiny loss. I don't even use feeler trades on my profit and loss report. I don't use them, you know, I consider them if I'm trading in a slump that goes against me as another loss. I don't consider those. I've mentioned this from day one when I said this. I do not consider feeler trades on my profit loss because the reason why I do them is to get emotionally involved with the market by learning some information about the market without risking a lot of money. Okay, so you see the volume is just continuing to trade again in this zone, in here, in this shoulder. So this is why we shouldn't be entertaining any trades inside here, okay? Whether you're buying or selling. It's not a good area. I just proved to you guys like how I got faked out. You know, even buyers can get buying up here. They might get faked out back down. So you just got to kind of let the market do its thing, let it continue to accumulate, and we'll continue to wait. So I'll just continue with this blog over here. Revisiting the trading plan. Ensure that a current trading strategy aligns with market conditions and personal risk tolerance. Adjust any parameters like stop loss levels if necessary, but within the framework of a tested plan. So I just showed you guys how I just took a loss, but I adjusted my stop loss. I didn't give it much room to breathe because I just wanted to see right away if that block was going to hold, that red block, it retested. That move should have pushed down right there. When it closed below, it came back up, retested, and right there it should have dropped. If the sellers were actually in the market and ready, it should have dropped there. But it was a fake out, and now it's coming right back up. So that's why I didn't want to give it too much more risk in this zone, because that candle proved to me everything I needed to see. That's it. You know, it met my criteria, and that's it. It proved to me that the sellers are not there. So I don't need to continue to give it more risk when I know it could just bounce around here and just further frustrate me. So sometimes I like that, where I get in a trade and right away it either goes into profit or it goes to a stop loss, and that's it. I clear my mind and I continue to think. I hate when I get into a trade and it's just playing with my emotions, up and down, up and down, up and down, and up and down. I honestly, I'm a different trader than most people. I like that type of trade where I get in and it tells me right away how the market is moving. I either go right into profit or I either get stopped out right away without having to go through all this bullshit. Am I profitable? Yeah, Rodrigo, I'm pretty profitable. I wouldn't be trading here with you guys every day if I wasn't profitable. I'm profitable enough I'm 43 years old and I can go right now and never trade ever again. Okay, I got passive income coming in, which I built over the years, and I don't need to be here anymore with you guys, but I choose to be here with you guys. I honestly want to help you guys. If you don't think I'm here to help you guys, go off the channel, okay? There's nothing more I can prove to you or tell you guys. It's up to you guys to believe me or not. I don't really care at the end of the day. I'm not here to prove anything to you guys, okay? That's why I don't show how much money I make. I don't show what kind of cars I drive. I don't show how big my house is. I don't show those things. I'm not here for materialistic things. There's other traders that you can go and follow them if you like Lamborghinis. I'm here to show you guys how to trade, how to go through a slump in trading, how to go through this shit every single day. If that's what you're here for, you're on the right channel. If you want to know what kind of cars we drive, I'm not here to show you that. I don't drive a car. I take the bus every day. I ride the city bus, okay? That's my best answer. I got a city bus pass. I ride the bus. Okay, anyways. We got to stay focused here. See, again, you guys are all about profits. Profits will come with good, sound risk management planning, okay? This is what most of, if you guys don't want me read this, I don't really care, okay? Because I know how to handle a slump. Maybe some of you guys don't know how to handle a slump. I know how to. But if you guys ever, God forbid, if you guys ever go through this, I hope you guys know how to get out of this, because it can be detrimental to you. But this is why I'm spending time on this. I know a lot of traders don't care about this, but if this day ever comes to you and you go in a trading slump, I hope you guys remember this blog that Ron read for you guys here. Another thing, okay, so setting realistic goals. Shift focus from trying to recover losses quickly to setting small, achievable goals. So such as improving your win-loss ratio over a month. Okay, you know, if you're in a slump and you've taken 5 losses in a row, don't make it where you got to gain all 5 losses back next day, right? That's an unrealistic goal. Try and just get your next trade to be a profitable trade or in profit and you're at a break even. Just try small, little baby steps, okay? And then slowly maybe string together 2 wins in a row and start chipping away at it slowly. Even if you got 2 wins, you don't have to recover all 5 losses in one day. You can, tomorrow you get 2 wins, call it a day, review. Maybe start the next day. Maybe you get another two wins, and then now you're cop right back up, but slowly do it, okay? You don't have to do everything in one day. Mindfulness and emotional control. Practice mindfulness techniques such as meditation and breathing exercises to maintain emotional equilibrium during trading sessions. Guys, I have a sauna, so that's where I go and do my meditation. I go in a sauna and I turn on a podcast and I just sit in there for an hour and I think about things. That's what I do. That's where I meditate. It's quiet in there. I don't have kids screaming and I don't have my wife in the background. So that's my personal space. I go in my sauna and I stay in there. That helped me. That helped me a lot yesterday. I went in there and it helped a lot. So if you can, get a sauna, guys. Get yourself a nice sauna and go in there and relax. It'll really, really take care of everything for you guys. It's healthy too, and it's great for you. But if you can, get a sauna. Simulated trading. Okay, so use a demo account. If you're in a slump, I know it sounds stupid. Everyone doesn't want to go to a demo account. Sometimes you got to go into a demo account. Again, just to, get the rhythm back, get the trading back. Like that trade that I took right there, it was live. It was on my live account. But if I wanted to, I could have gone into a demo and tested that out, take a loss on a demo, still learn the same thing that I would have learned with a live trade. Same shit, but it takes, you gotta eliminate your ego, okay? Because a lot of traders don't want to say the word demo, because if you do, then you sound, oh, you're not a real trader, you're just trading with a demo. No, a demo is a very powerful tool if you know how to use it properly. If you're not considering it money-wise, you can still back test, you can learn new strategies without risking your capital in the markets, as long as you treat it as if it's a real account, as long as you treat it as if it's real money. The demo account is very powerful, but I know a lot of you guys do not use demo accounts, so it's pointless me talking about this right now. But if you can, use a demo account to practice trades without financial risk, especially if you're in a slump. You don't want to lose more and more of your capital. You want to preserve it and then fix it with a demo account. And then once you get that rhythm and that momentum back and that confidence, then you go back to your live account. So a demo allows you to rebuild confidence in testing strategies in a stress-free environment. I'm fully for a demo account to use it when you're in a slump to regain your confidence. Education and skill development. Engage in webinars. We have a webinar later tonight on trading tools. Read trading books. There's a lot of great books out there. There's a lot of great audio books. There's a lot of great podcasts for trading out there. Or take courses to refresh knowledge or learn about new market trends and techniques with SST. Seeking professional guidance. Consult with a trading mentor or coach who can provide objective feedback or guidance. We're not financial advisors. We're not here to advise you on anything in your finance, okay? I can speak for myself, what I do, but I'm not your financial advisor. We're not licensed to do that. I trade live with you guys as if I'm trading by myself. Whether you want to follow me or not, that's your decision. We're all adults here. But I like to consider myself as a trading coach. I've been doing this for 20 years. I've learned a lot of mistakes myself, and that's why I'm trying to teach you guys. I like to be a mentor to some of you guys. I wish I had a mentor when I was growing up to teach me these things, but I'm no way in shape a professional financial advisor. If I was, I would be a suit and tie and I'd be working at the bank or on Wall Street. So I'm not that, guys. We're not that, so don't consider us to be that. We're your friends, we're your buddies. We can help you go through shit that we go through. I know what you guys are going through when you guys are trading. I've been through it 10 times, probably worse than you guys. So I know what you guys are going through when you guys are struggling. So that's why you guys saw I went through a slump and getting out of it. Taking breaks. That's one thing where I fucked up on. I should have taken a longer break when all of this shit happened with me in my personal life. I didn't take that break necessary. So that's, stepping away from trading temporarily to clear your mind and prevent burnout. Returning when you're ready to focus again. Risk management, again, we always talk about this. Reassess and reinforce risk management strategies to protect against further significant losses, like adhering strictly to stop loss orders or adjusting position sizing. Some of you guys are trading with crazy position sizing. I cannot believe it myself. Some of you guys said you guys were down 30%, 50% in a day. Boggles my mind. I don't even know how you can get to those numbers when you should be trading with, we always say, advise 1% per day. I don't know how you can get there, okay? And then just finally, by addressing both psychological and practical aspects of trading, traders can regain the footing and establish path back to consistent success. So here's where you get a trading edge. When everyone says, Ron, I need a trading edge, make sure you can perfect all three of these. You have to have a trading method, okay? That's your trading plan, your strategy, your technique. It doesn't matter what style you are, just make sure you perfect it. Trading psychology, this is your mindset. This is how you control your discipline when you're losing and when you're winning and you have shitty days, and how you recover. Psychology is very powerful. Make sure you learn this. And finally, risk management. You can have two of these, but if you don't have the third one, you will not have edge. You can have a disciplined trading method. You can have a disciplined trading psychology and control your emotions. But if you have shitty risk management, this means nothing. Okay? You could have amazing risk management. You can handle your emotions, psychology. But if you have no trading method or plan or technique, you have nothing. Same with if you have trading method, you have a good sound plan, you follow ICT, you follow SMC, you follow anything, and you have good risk management, but you have no psychology, you can't handle your emotions, you're not going to have any edge in the markets, okay? So you got to make sure that you perfect all three of these. When I started trading, I had a good trading method. I have the same method I use today that I used 20 years ago. Same style, okay? I'm a price action trader. I learned it early on and I still follow it. I had good, I'm going to say not the greatest, but I had good psychology, okay? I worked, I'm going to say it's 50-50. I was good, but I lacked risk management early on. I was over leveraging. I was going all in. I was thinking get rich quick. And once I learned how to balance all three of these, that's when everything changed for the better. So I hope you guys can continue to do that as well, okay? So sorry for that blog, but sometimes it's necessary to talk about these things. And while we're doing that, gold is still just trading inside here. It's almost 8 a.m. So we can look at our hourly candle, what's been happening. Okay, so these are our hourly candles on gold. Okay, we had that big bullish one that hit the all-time high at 5 a.m., 6 a.m., big bearish candle coming down. Did it engulf? No. And then now we started bearish this hour where it just broke and it's coming right back up. So it still hasn't closed with any volume above here. The hourly volume is still trading in this consolidated zone. So maybe it's going to continue to trade in here, okay? It is still building in here in the shoulder. Okay, so remember what I was saying, like the head and shoulder technique? You know, if you look at anything on Google, it's going to say it goes left shoulder, there's the head, and it's got a high probability of continuing to go down, right? So, you know, that candle that closed below, gave me the confirmation of the first candle that closed below. You remember that candle opened up blue and got retested. It had a wick at 50% and started going down. I took the sell and I placed my stop loss just above that body. Why did it not go down like how patterns should go down, right? It's a perfect head and shoulder pattern. I had the body close, I had a retest and dropping. Why did I not make any money, right? Because that's not always how trading works. Just because you can identify a pattern, you still get the confirmation, you still get volume close, you get the proper retest and it's dropping, that doesn't mean anything still. So that's why you always gotta watch your stop loss too, because you gotta understand that. So you see, I just gave it I told you, very tight stop loss, just above that previous candle. I could have put my stop loss above there, I would have been stopped out. Could have had my stop loss above this entire red box, but you see, I would be still in drawdown right now. And then when it breaks out of there, what if it's an impulse break continuing to drive, okay? So once in a while, you guys got to learn how to accept a loss. It's part of the game. I know it sucks for me. I'm a live trader here on YouTube, and you guys are making fun of me. That's okay. I don't really give a shit. I don't trade here for you guys, okay? I trade to teach. I trade to learn, okay? It's not a game for me to just get into trades, and I want you guys to learn too from my mistakes. It's up to you guys whether you want to learn or not, okay? I tried to help you guys, but some of you guys learn, some don't. And to the ones that are not learning, it's, you know, I wish you guys the best of luck. because I know how difficult trading is. Because you got to balance everything in your everyday life. Life is a struggle as well, okay? And then to balance this on top, not easy. Especially if you rely on trading as your income and you're putting all that pressure on yourself, that adds so much more pressure you can't even imagine. That's why I always recommend that you have some side income to pay your bills, pay your mortgage, and not rely on trading to pay those things. You want trading to be natural. You want trading to compound. You kind of don't always want to just take your winnings and pay your bills. But some of you have to do that. That's life. But because you really benefit from trading as the larger your account compounds, because that 0.5%, 1%, you start making more and more and more. Okay, so we're pushing back up. It's 8 a.m. now. We're still inside here. We have Colmex market opening up in 20 minutes. Chris, how long does it take? It's been 9 months. You're still struggling? Chris, I can't. Chris, I'm going to be honest with you. It might take multiple years. We've got traders in our group that have been here a few years and still struggling. Okay, it's not. There's no given time. Okay, I wish it was to tell everyone it's a certain amount of time and everyone's going to be doing great. It's all determined. You determine it. Okay, you determine it. If you're still struggling after 9 months, we got to get to the root cause, why we're struggling, what is causing it, and we got to fix it. Some traders can fix it right away. You know, some traders struggle for, we have in our group 3 months, and boom, right away they figure it out and they're profitable. Some take 5 years, right? It's all, how you figure this out. But don't give yourselves like a time limit. Say, I got to figure this out in 9 months. I got to figure this out in 3 months. I got to figure this out in a year. Naturally, it will come when you figure out everything. Don Julio, you're on year 3 and you still can't hold a trade. It's yeah, guys, it's not easy. It's not easy. That's why discipline. You got to stay disciplined. Did I not buy this breakout? No. So this is an impulse breakout now, closing in 50 seconds. This first 5-minute candle is representing the 8 a.m. candle. So this is our hourly push right now. Okay, so this is a nice breakout. I'm just going to go through the motions. Okay, so you remember this was representing 50% of our hourly zone. Excuse me. If this closes in the next 30 seconds above here, I'm just going to flip this zone green. Okay, so we got a really nice bullish candle coming all the way right back into here. I'm going to assume it's going to close above this red zone. So if we're looking to maybe buy a pullback, okay, we got to wait maybe for it to come back down into this green zone or a little deeper. However, it could just come to 50% of this bullish candle, right? So where's our cut line? So right there, we're inside that point of control of the hourly. Remember on the hourly candle right there, where that previous bearish hourly candle right there. See how we're trading right into it now, okay? So this is now how it looks on the 5 minutes. So see that white line? That was 50% of it, equal highs coming right back down, okay? So if you're looking to buy, you can either buy that shallow wick, or you got to wait to at least 50%, or you got to be patient and wait all the way down here at the retest zone, okay? And it has not retested as of yet, okay? So should we buy right now? Or should we wait for the pullback? If there is a pullback, there might not be. Maybe it continues to drive right through here, and then we don't get that pullback discounted entry. Okay, and it's a hammer candle, right? So it could continue to break out. But remember, this red box represents that entire hourly red point of control. So will it get right through here? Will it come back down? Or maybe it could be a fake out. Yeah, absolutely. It could be a fake out too. Okay. So then the only other thing, guys, we got to wait patient to see maybe will it come back down to 50% or to that green box. Maybe we can buy a discount there around 4,039, 4,040, and then maybe we'll come right back up and go higher. Okay. But right now, if we're want to buy now, you know, it's kind of like FOMO, like we're fear of missing out because we're not patient to wait down here. So sometimes what happens if we buy right now and then it comes all the way back down? We're going to go and draw down, but maybe we'll put our stop loss below that green zone just in case it comes down, pick up the buyers, and then we go right back in profit. So, but maybe we can try and teach ourselves to wait so that we don't have to go and draw down and then we can buy a discount. But sometimes it just wants to go and go and go. But this is where you got to learn, you know, kind of discipline. What's the point of learning discipline if we can't wait patiently for a pullback? Then just buy this thing, okay? And see what happens. Buy it and learn from it, okay? Sometimes maybe you buy it now and you will get rewarded where it goes up. But every single day, if you trade like that, you're probably, you know, ask a lot of traders. Did they make a lot of money by trading FOMO, by fear of missing out? Probably not over time. Maybe you might hit a couple trades here and there, but over time, if you look at, you know, back test, pullbacks, buying those entries, where we're not the only ones trying to wait here for this area to buy. There's probably a lot of orders pending in here what want to buy at the discount. So I would rather buy with those orders, more volume, and maybe get inside there and then go into profit without realizing any drawdown. Because the risk that I take here, if I buy here, it could go all the way down, then I'm in drawdown. Okay. And then the only other thing is I'm missing out on a trade right now. I'm missing out. Okay. That's the fear of missing out. That's why some of us can't control ourselves and we have to buy this right now. Okay. If you want, go ahead, right? I'll continue to analyze it with you. If you buy, then what you're looking for is volumes close above here. You're going to flip this red zone green. If it pulls back, maybe in here you get a higher low and you're continuing to drive. But now when we're learning, okay, so that fake out that happened right there kind of triggered this event, right? So, you know, when I took that, I told you guys, the body closed below, it opened, retested, and came down. I took that sell, and you see, fake out. Came back up, came in here, and then they came right back up. So learn from this. That opposing fake out, now they're redistributing to the upside. And it's a nice bullish candle. That was the previous all-time high. There's now like the double top coming in there. Can start to adjust it maybe right there. And now we're going to watch. Is it going to be a double top? Is it going to be a new all-time high? Are we continuing to drive? Or is it going to start to pull down? So this hourly zone now, that 5-minute candle closed above. So I'm just going to make this a green zone to represent the hourly support. If we look at the hourly candle now, see right there how we're pushing above that point of control of that bearish candle. On the 5 minutes, we did close above. That's why I've changed it to green. So you can see if it pulls back now down in here, maybe this white line we could look to buy, 4,043. If it comes all the way back down in there, might hold in there and then go back up. Okay, so it is coming down, right? It could get a wick right at the top of the green box, representing like 50% of that candle. It could come all the way inside here, or it could just pick up a higher low wick and start to move. So it's got equal highs on those 5-minute candles. Okay, so it's coming down bearish. And remember, guys, we're 8-9 minutes away from COMEX. So this is another thing too. If you want to take a trade, remember how I took a trade too the other day prior to COMEX, and then boom, it just reversed opposite direction. So you got to now ask yourself, do you want to take a trade 8 minutes before 7-8 minutes before COMEX market opens, or do you want to wait for COMEX? Because a lot of things happen during COMEX. A lot of volume comes into the market, a lot of volatility comes into the market. They might be designing this to come back up to the all-time high, maybe break it out, then drop it, or it might pull back and continue moving. This is now where you got to have a plan. So that's completely up to you, right? If you do take, let's say, a buy prior to COMEX, are you just buying just because, or do you have any reasoning for that information you're deciding on? Like, do you know why you're buying into COMEX? Did you read anything about COMEX market open to decide that, or you just want to just buy and hope for the best? Okay, because that's not a trading strategy. It's not a plan. So I always say, maybe if you're already in a buy, you're already in the trade, you've already reduced your risk, and you've got to go into COMEX, whether you like it or not. But there's other traders who are on the sidelines waiting 6-7 more minutes. Should we go in now or should we wait? Okay, so I'm going to wait. As much as I want to buy, I could buy, and then it just goes up maybe 10, 15, 20 pips, and then COMEX market opens like the other day where it was a bearish engulfing candle, and it just came all the way down. You guys remember that, okay? So maybe today is going to be opposite. Maybe it opens bullish and continues to break right through here, okay? And if you're in a buy, you're going to benefit from it. But it's just, in my opinion, it's just too risky right now. It's we're approaching the second all-time high, like the double top, and we're 5 minutes away from COMEX. I'd rather sit back and watch, see how COMEX market opens. Guys, if you learned anything about that blog, what I just did, talking a lot about the psychology, trading in a slump, how to get out of it, hit the like button, okay? And subscribe to the channel if you like kind of some psychological talk in trading, some talking about, mindset and things like that. If you don't like the channel, I gauge off of, we have 440 viewers. If there's only 50 likes, 100 likes, I know that you guys are not into that stuff. You guys are more into just trading candles. Then I'll go right into technicals. Then we'll just jump right into 1-minute candles, 5-minute candles. And then I'll leave you guys to figure out psychology, mindset. You guys can figure out your own risk management and trading, things like that. That's on you. We try to help you guys out with all aspects of trading, but some traders don't really care about those things. And I don't want to waste time on here, because reading that blog, took about 30 minutes out of our session, where we could have been entertaining. We could have done a top-down analysis on another security. If you guys don't care about that, you guys let me know by the likes. That's what I gauge off of the likes. I know it's good for YouTube. YouTube grow. I really don't care about YouTube, to tell you the truth. Ever since I saw YouTube was censoring what we say here, like YouTube is not a free speech platform. It's full of shit here. So I really don't care about YouTube, to tell you the truth. We don't monetize off of YouTube. If I tell you how much they paid us in 6 years, you guys would probably laugh. It's not even enough for me to buy a coffee. Okay, so now look, it's coming down. Okay, so if you're in buys too, you got to have a plan, right? COMEX still hasn't even opened. Okay, we got 4 more minutes. So this candle is a bearish ignited candle coming right back down. I'm telling you, everyone on this call can learn all about technicals. Technicals are easy. My 9-year-old daughter knows technicals of candlesticks. She's better than me. But she doesn't understand emotions in trading. She doesn't understand psychology of trading. She doesn't understand risk management of trading. So like even our children can learn candlesticks, right? It's not that hard. You can learn them too overnight. But what takes years and years and years of practice and learning is learning from your mistakes, learning your risk, learning all of these things. That's what separates successful from unsuccessful traders. Anyone can know that this is a bearish ignited candle that came down. You know, I can tell that that's a bullish engulfing candle. That's not hard to determine. Okay, so that was a big bearish candle, came right through that hourly zone, picked up all those pending orders, coming right back up with 2.5 minutes to go into COMEX. So let's see if it carries that momentum forward. I would want to see it take out and break for a new all-time high. If it just gathered all of those pending orders and it closes back strong, I would assume COMEX would open with that momentum and continue to break out of this red box for a new all-time high. Just following the path of the candle and with the added volume. However, if the COMEX opens and they manipulate it, just open it bearish and drop it, then you know something is not right, right? You got to ask, how is that even possible? Okay, then we got to see what's going on. And this is where it could be flagging now, you know, like right below here and above here. Could be a little bit of a flag zone. Okay, and then when we're talking about double tops, it's like when we look at pattern recognition, there was the one top, there's the bottom coming right back up. Okay, so that would be technically like a second top, right? But it could just, you know, force its way out of here and just continue driving for a new all-time high. Just like I showed you, a head and shoulder pattern has a high probability of breaking down. It didn't. The M top, double top, has a high probability of going back down. It might be a false signal and continue breaking out of here. But you got to understand that it could break out and it could get dropped there. How do we determine that? You can wait for bodies to close. Or you could just go on impulse if you like, or go on a hunch that if it comes in there and gets, but don't go big lot sizing. Go smaller until you get more confirmations and add as you get more confirmations. That's up to you. Okay, here we go, guys. 30 seconds. Now let's watch the close. So it's still above this hourly point of control. You know, it came in here, back up, came in here, back up. So it's still holding bullish volume. So maybe COMEX will open bullish and just start breaking out of here. If we see it open bearish and come down, we know that they're playing around with the market. Okay, that's a nice hammer candle. Will it close above these bodies? Okay, so it came up there. Those are 3 equal high wicks, and they're rejecting it down. So you know when I always start to call out manipulation and bullshit? Look right there. Those 3 wicks are all equal. 4,046 and a quarter. Equal, equal, equal. Here's COMEX. Ignited bearish. Let's see how low it will go. Okay. Will it continue to drive through this green zone? Will it come back up and flip? It's still ignited. Still has that ignited head coming down, coming down. Let's see. Right there's that 50% of that point of control of that hourly zone. Will it hold? Will it hold? Will it come back up? Remember that ignited head? They opened it like that. Okay. So let's see if it can flip. If it just flips, it'll turn blue and just maybe try and come back up to this red line. That's where you can scalp it back up if you like, and to see if it will break up there and come to the double top zone. But it's still ignited, holding. Okay, the candle has not flipped blue yet. Still bearish, bearish, bearish. This is the first 45 seconds. Okay, so it's still bearish, bearish, bearish. Now is it going to fill those entire 2 wicks? Those were kind of equal bottom low wicks right there. Okay, so will it fill and break those? You know, when we're looking for a nice pullback buy in here or down here, will the market come give us our pullback entry all the way down here? Okay, it's still bearish, bearish, bearish. Those are those equal wicks there. Those were equal high wicks there. The volume is just concentrated inside here. Let's see, will they take those out? Or will it be a higher low? Still in the green box. You know, it's still got a lot of orders in here. Sellers are selling, buyers are buying. Will it come all the way back up? Now we got 3.5 minutes left on this candle. Oh, sorry guys. 9 EMA is right here. The 9 EMA is right at that red line. 200 EMA is, where's the 200? All the way down here, okay? So we're right at the 9 EMA, which is this green line, those equal bottom lows, red line, bearish ignited candle coming down. So far, it's got a higher low. When do I buy or sell? You'll hear me verbally say I'm buying or selling, okay? It's not going to be a secret. You'll hear me saying I'm buying or selling. I have nothing to hide. I'll tell you guys, I'm either buying or I'm selling. Sometimes you got to wait. But learn too. Not just listen whether I'm buying or selling, okay? Learn what's going on. Ask yourself, what's going on with this candle? Do you guys know why it opened like this, how it's coming down, how it still hasn't broke those lows? Did you guys notice that the 3 equal tops up there didn't break, and it's right below the all-time high double top? Specific reason why they did that? Ask questions, guys. Okay, look, now they came all the way down. They broke those. New lower low coming down. So if you wanted that discount buy at 4,038, you might potentially get it. So when I was saying, do you want to buy at 0.46 or 38? Now you're getting maybe a substantial discount. If you wanted to FOMO buy up at 46, why are you not considering a buy at 40? Right down there. Right down there. Why are you not considering that now? Now you got your 75 pip discount coming down. Okay? Patient buyers could be waiting in there. But the thing is, it could drop even further down. So that's the risk you take by just placing an order right now. It's retesting now. So there was the breakout. That's what I was saying, guys. If you don't want to FOMO buy, you're going to get an opportunity. It will eventually come back. Now you guys are probably shitting in your pants. Now you don't want to buy. There you wanted to buy up there, but then now when it comes here, now you don't want to buy. Why? Why? Because this big bearish candle is scaring you, right? I know how trading works, guys. That's why you got to eliminate emotions. If you wanted to buy up here, you're getting a substantial 75 pip discount here now. So why are you not in a buy? Because this candle could potentially close below here and drop even further down. 40 seconds to go. I know how trading works, guys. You were dying to buy up here, but when it comes down here, now you're shitting your pants. I know how it feels, guys. Believe me. But this is COMEX, so it's bigger volume. It could continue to drop through here. And if this closes below, this zone is going back red. That hourly point of control is going back red. You know, like the hourly momentum. Look at it. They got that big wick and could now really sell this shit down. Okay, here's the close. Get ready, guys. I won't even have time to close. Look, it's closing right at the lowest point. Blue, watch a quick little retest of that and watch it drop with no wick. No wick. No wick. Okay, it's going to probably break. I might entertain a sell to bring it back down into that consolidated box. Oh, I missed it. I missed it. I was looking at my spread. Damn, I missed it. I was going to hit the sell button, but I was looking at my spread and I missed it. But you see how quickly, you know, shit can happen. Now it's going to go right back down into that consolidated zone. You see, COMEX, again, they faked out the market, guys. We're learning the patterns of COMEX now. It's been doing the same shit day in and day out. They bring it up going into COMEX, and then they slam it down during COMEX. Pattern recognition. Now we're trading right back into this consolidated zone. You guys understand how gold can really, really screw you over, really, really test you. This is not for beginner traders, I'm telling you. This is a very difficult security to trade. So you see now what they did? The all-time high. Here's the consolidation zone. Right there, it could have came to the double top. They look at 3 equal highs right going into COMEX, and then they dropped it down. So they've been protecting this all-time high zone. They're the sellers offering right there and pushing it down. Now, is it going to come all the way back down, or is it going to come back up and we're going to make our way back up in here? Okay, so right now it's technically coming down. I was going to sell that break of the wick. I didn't. I was looking at my spread. So I don't want to, again, sell right near the lowest point. Got to wait it out. Sometimes even scalping, you got to be very quick. If you're on the 1 minutes, this is what you're kind of looking for. There was that 1 minute candle, 824 that broke, 825 it came up right there. When it broke, that's what I would be selling, okay? But I didn't get in. I was looking at my spreads. Should have just hit the sell button. Did you guys learn anything about COMEX market open? It's not Colmex, it's COMEX, C-O-M-E-X. Short form for Commodities Exchange. You guys have to know this if you're gold traders. It opens at 8:20 a.m. Eastern and closes at 1:30 p.m. Eastern every single day, Monday to Friday. It is the exchange for precious metals such as gold, silver. They trade on that exchange. It's an exchange dedicated for gold volume, gold traders. The gold auction. Just like Wall Street opens 9:30 every day for the stock and equities market, COMEX is for gold. You have NYMEX, New York Mercantile Exchange. That's for crude oil, energy. Okay, so what is our bias now? What's going on, guys? Do we think it's going to break down, back down here and start dropping? Or you think we're going to come right back up and retest these points of interest? What's everyone's perspective now? Did everything change up now? No idea anymore, Chris? Yeah. But maybe if we can't determine on the 5 minutes, let's look on the higher time frame. Okay, so let's see what we got on the 1 hour. So that 1 hour big bullish candle took us to all-time high, that big drop, then we came down. See, we got a lot of wicks down here where we got a lot of buyers coming in, came back up. That was that big move up, lower high, and they pinned it back down. So you still see how we got this volume in this box in here. If we later today get an hourly bearish candle, hourly closing below there, we could really start to signal this leg selling back down, okay? Today could be that day. And now you're seeing the buyers are still holding it back up, okay? So will today be the day where gold is going to sell off? And we have to be very careful because every single basically dip has been bought up. So we got to really see more volume closing below there. You know that first fake out right there where I sold? We got to see more and more bear volume coming down, closing below there to flush. But right now, look, it came back in, okay? So it closed back above there. So that's a green zone now. Now you see we're working back up here. So will they work it all the way back inside here? Now what you can do also with that big bearish candle is at 8:20, that was the first 5 minutes of COMEX, you could also determine the point of control of that candle, okay? Now you see how it came up, back down bearish. We're barcoding now, bearish, bullish, bearish. If they get it back down in here, you could see that leg continuing to push down, okay? Some of you guys are in longs, some of you guys are in sells. I see that, okay? Welcome to the world of trading. I'm going to go in a continued sell if I get this one more push down. Okay, I see it coming down, barcoding. I want to see if it will come all the way back down, okay? but I got to see it come back down, come back down, come back down, and start breaking the point of interest of this body. It came down, went back up. So I want to see if these sellers can continue to bring this down, bring it down, bring it down. And maybe I want to join in now. Okay, so I'm joining in. I'm going to place my stop loss. I could be, again, I'm adjusting my stop loss. I could be right at the hourly point of interest right there, just above that line. You can see it's pretty tight. If the buyers just bring it back up, I could get stopped out. So I want to be on top of that entire hourly box, right? The hourly. And then I'm looking to see it come down there and break and come down to that next hourly white line. Okay. So I'm in a sell on gold. I'm going to try. This is not like this is a real trade. This is not a feeler trade now. So, and again, I could, I could give it a little bit more room to breathe above those 3 highs. But if this zone can't really hold up, I don't know if those wicks would continue to hold up. Okay. So this candle is going to close in 3 minutes. We're kind of barcoding. Bearish, bullish, bearish. I need, to see more selling black volume to close down in here so that I can continue to make the green box red and we can continue to offer off of it so we can continue to push down, okay? So I'm in a sell. I know some of you guys are buying. I know sometimes I go and buy as you guys are selling, but I'm just going down with the volume, okay? Coming down with COMEX momentum. It came back up, pushing down. So we'll see what happens. And if I really, really wanted to give gold to breathe and I wanted to hold it for today, longer, then, I could be just above that all-time high. But, if it comes up there, I'm giving it enough room to breathe. I'm happy with where my stop is. And we're back, we could be trading in this tough consolidated zone, okay? So that it comes in here, it could be trading again like this. We got 90 more seconds going to close. I'll follow gold till about 9 a.m. And then all I need is about 10 minutes for US30 and 10 minutes for NASDAQ. We'll do top-down analysis. And then we'll get those ready for Wall Street, okay? Right now we're going to stress out with gold. And the close is in 1 more minute. Trading against the trend. Yes, you're correct. I am trading against the trend. Here's the 5-minute trend. Let's start it from right here. Connect A to B. Okay. So yes, you are correct. I am trading against the trend, but I'm going with the all-time high top right up there. I want to break the trend right there, the support right there. It came back up, lower high. So it didn't come back into the all-time high double top. COMEX brought this down, closed below there. That could be that blue candles that pull back. And then now we could be coming down. I want to see volume close bearish below there. So then we can come down, break the trend line, break our zone, and then start to come down to the 4-hour point of interest, 4,028. And, so yes, I am going against the trend. But there's context why I'm doing this. Okay, so let's see. Can we get a bearish engulfing candle below there? Close below, below the green box. Yes, we got it. Okay, so I'm going back to green to red. So it could come back up bullish. But now I want to see if this zone, so it's opened, ignited. It opened, ignited. Strong candle, ignited, open. Coming back up. So right there, the red zone is representing 50% of that previous bearish candle. If it comes in there, I want to see a wick there and go back down. However, if it's a shallow pullback right now and they reject it right now, it could break that opening balance and start filling that previous wick and get us down to the trend line. And then that would get us in a little bit of profit. Then maybe we could start to potentially reduce risk. Okay, there was that good shallow rejection. We broke the ignited open right away. That's perfect. Now we got to just continue to fill the previous wick and drop even further. Where? To the trend line and more specifically to our consolidated zone right down here. I'll draw a green box so you guys can all see this zone right here. Okay, so it's not an equal low. We actually got a new lower low. That's good. In order to keep moving down, we got to create lower lows in the market. So it came down, coming back up. There's always going to be buyers, okay, because there's discount buyers. But now we got to continue to follow the volume. Right now, it's bear volume is in control. Okay, so that's running approximately 30 pips. Okay, 30, trend line, 35. If we get down to the green box, about approximately 40 to 50 pips, you can start to reduce your risk now. Start reducing risk. Start reducing risk if you like. I'm just going to be above those bodies now, just above that body. Okay, so you see I brought my risk down. I'm not at a break even completely. I haven't taken out any profit yet. Okay. Now we got to continue to watch. 3 more minutes to go. We broke the trend line. Can we tap into this green box? If we get bearish volume closing below here, then we could use the trend line as resistance and continue to push down. If I get this bear candle close below this green zone, that could really get us to push down further. But if you guys are happy right there with, 40, yes, right there, 45 pips. I'm going to break even now. I'm going to trade more robotic with you guys. There's a 50 pip grab. I'm taking out 80% there. 50 pips. There, 50 pips, 50. That's what I do as a scalper. How much drawdown did I realize? 0. Nothing. Nilch. Nada. Okay, so I'm trading robotic now. I'm not fucking around anymore on these calls. Okay, so I got 20% running. There's 60 pips. If it wants to continue to run, great. But the gentleman just said I'm trading against a trend. You're absolutely correct. So that's why I got to go to a stop loss break even, take some money out because big buyers could bring it right back up. So that's what, but if the candle closes below here, we can change this green zone red, that first false fake out. Now this is coming down with more momentum, more volume. We could close near the low and continue dropping down further. This white line down there where I have complete down there, that's that 4-hour point of interest down there, 4,028. But guys, so hopefully I walked you guys through that. That was a pretty clean setup. The highest point, top, consolidation came up. Ask yourself, why did they not just bring it up a little further right there at the all-time high? I always ask questions. Why? Because they did it strategically. They offered right there. 3 equal highs, stopped it. There's COMEX, ignited, open, come down. I waited for it. I wanted to sell right there, but you see, if I sold it, I would have got caught, but my stop loss would have been up there. I would have been still safe, but I waited. And in this bar, as it was coming down, I told you, as soon as it breaks down there, I'm in a sell. In a sell, as soon as it opened, we flipped the box, shallow pullback. It didn't even retest, broke, no wick on the candle. We filled that low and we continued drop down to the green box for approximately 60 pips down there. Okay, now we just got to continue following the rest of it with 40 seconds to go. I only have 20% at break even. So the only thing I'm risking right now is 20% of my profit. Hopefully we're all at break even, guys. That's how you want to trade. Protecting capital while making money and taking some money out. I would love if gold dumped all the way down. Okay, but that's not the case, right? What about here? All these gold sellers thought it was going to dump and it went back up. Here it sold and it went right back up. Here it sold and it went back up. We're selling right now. It could definitely go right back up. So now we got to follow it. Let's follow this shit. Okay, go through the motions with me. First thing, if it closes below the green box, go red right now. Look at the size of the wick on the candle. Short wick, ignited bearish bar. We're continuing with the momentum. Ignited bearish bar, continuing to drop. If it needs to come back up and retest, we got now a zone of retest. And we also have the trend line that could act as resistance now, okay? And if we target down that the white line, that's that 4-hour support line, okay? So we did break for that new low. Buyers are coming in. Why? Because they're getting in on discount. Look at these wicks right there. There's a wick. There's a wick, and there's another wick. This is where the big buyers stepped in at 355 today. There's where they stepped in at 530 today, and they're stepping in again at 840 today. So it could come all the way back up, but we still have this now, a red block now. Okay, where's 50% of that big bearish candle? Find the point of control. If you want to have a trailing stop loss, go open, close of that candle. There's 0.5. What you can do is you can just increase this zone, what you have right now, 0.5, right there. Okay, and now we continue to watch if the sellers now are offering in this block. Right now they're there, they're offering. There's the wick. We got to just continue to push down. But now it's retesting this zone. Okay, so it could be buyers are buying up the pullback. But if more sellers are offering, we got to continue to offer, absorb them, and maybe we can continue to break down. This white line is a 4-hour point of interest. Where did I get that from? When we did our 4-hour analysis, coming all the way back over here. Sorry, guys. Let me just do this quickly. Remember this? This white line is right here, where our 4-hour closed, and then where our European 4-hour candle opened right there. So that's that point of interest, 4,028. We have a 4-hour candle coming all the way down now, closing in an hour and 20 minutes. So will this 4-hour candle have enough volume to retest that opening balance of the previous 4-hour candle? Okay, so that's what that white line is down there. Sorry I'm talking fast, guys, but, you know, scalping is a fast game. Did you guys understand what I did there? Hopefully you guys understand, okay? I hope I explained it properly. Guys, patience, discipline, waiting can get you guys in good setups. You don't have to rush shit every single day. You know, I rushed that trade right there, but I wanted to teach about that one. I really wanted to teach you guys. I hope you guys understand what I was doing there to teach you guys. That's why I put such a tight stop loss right above the body. So, like that loss, I lost 15 pips, but I gained it right back with that trade, no problems, and I got a little bit more. So that's how trading works, guys. You got to learn how to change up your lot sizing, knowing when you're trading, what time, when more volume comes into the markets. It's just, I know with practice, maybe this is really, really difficult for you guys right now because it's new. Believe me, it's new. But when you do this every single day, you're going to be doing this with your eyes closed. It's going to become very repetitive. You're going to look for the same shit every single day. And that's how you can stick with the same plan over and over and over and over. Okay, so you still see the red box is still holding up. Our trend line is still holding. The candle's got 90 more seconds to go into the close. What if we flag down here a nice little bear flag and then continue redistributing to the downside? But you got to understand that there's a lot of hungry gold buyers that are buying this discount because they're assuming gold's going to go right back up to the all-time high and higher. Maybe sellers now have a different story. Maybe now they've established the highs and now they're ready to bring it down. I hope we can continue to come down without getting hit at break even, okay? But that's why I also took out 80% on the way coming down, right into that green zone. That's why I trade very disciplined to these boxes. You can call me a box trader, box trading strategy. I don't give a shit what you call the strategy. It's trade from one zone to the next zone. I like to call myself a zone-to-zone trader. I like to also be called a tape trader. Like this is called tape, reading the tape. These colored lines. And I stick to those lines. That's what keeps me disciplined. Okay, so that's a big bullish candle that's closing right now in 7 seconds. So here we go. If it closes back above this box, I gotta go green. So it closed inside it, it's still red. Opened very strong. It's testing that trend line now, okay? So this trend line, I didn't just guess this trend line. I started it right there, connection from A to point B, and just extending it into the future. Now, if it gets rejected, there it was support. This could be resistance on the trend line if we continue to push down, okay? So far you see how it got rejected at the trend line. Now the candle's turning into a bearish pin bar, shooting star. Can the sellers have enough to bid down, back down in here and get it below here? Because right now a lot of buyers are wanting to buy this and bring it all the way back up, okay? But you can kind of visually see we're trading into about 50% of that bearish candle right here. Open, close, half of it is right around here where my cursor is, and it's lined up with the trend line. So if the sellers are here, they're going to be here, okay? They're going to be here to push this thing down. If they're not here, then unfortunately the buyers will continue to ask and trade back up here. And then that's where I'm going to get stopped out of my break even. And then we'll test the next red zone above us. Cash, thank you, bro. Again, you don't have to give the donation. Don't worry. Just mention in the chat. You just made 10% on that short. Coffee on you. Thank you, bro. Here's the coffee. Cash, you see it? Thank you, bro. I appreciate you, man. But you don't have to do that, okay? I sincerely appreciate you. If I ever met you in real life, I hope I do one day, I will buy you unlimited coffee for yourself. And I would love to meet some of you guys. You know, honestly, I know some of you guys for 1 year, 2 years, 3 years, 5 years. I'd like to finally meet some of you guys in person. That's what it's all about too. I love traveling, and then I meet some snipers around the world. It's hard for me when I don't get to see your faces, you know. Come to Australia, Daniel. I will. My mom has an aunt in Australia, in Melbourne. I want to take my mom, but she can't do long flights. She is 80 years old. You know, she can. So I know it's a 24-hour flight for us, but I want to take her. Okay, guys. So I'm happy now. You know, I don't look back at trades and say I should have done that, I would have done that, I could have done that. I'm happy I took out 80% down there, because this shit can happen where it comes all the way back up and then taps you out, and then you're left scratching your head why you didn't take out any money. So this has happened to me a million times in trading. That's why I tell you guys, I'm not screwing around anymore. Trading very robotic. Absolutely. Like when I got in that sell, I wanted to start dumping down in there. But we got a good dump. We got to take some profit out of the market. We got to take our stop loss number 1 to break even, because we don't want this to continue to go up and then put us in a drawdown when we had a profitable trade. Okay, so guys, I'll let you verbally know as soon as I get stopped out here. I trade with Fusion Market Brokers, so it's different than this FXCM. I don't trade with a prop firm, okay? So just want to make that clear. Someone asked me the other day, Ron, are you trading with prop firm? I do not. I trade Forex with a real live A-book broker, Fusion Markets. They're located in Australia. We're talking about it right now. Unfortunately, US residents cannot use them, laws and regulations. And myself here, anywhere in Canada, any other province can use Fusion Markets except for Ontario, Canada, where I am. I just got tapped out at that remaining 20% at break even, okay? So now we see that the buyers are back in charge, okay? So that was a minor sell down in there. It's coming back up. But we do have some resistance blocks above us, okay? So look at where we're trading. Look at where the volume is back right in. It's, again, in this consolidated shoulder, okay? So we had that breakout, back in the shoulder. Come back up, back inside here, and it's right back in that shoulder, okay? So just a quick little recap, because we got to get to do some US indices. It was a 60 pip drop from entry. As it came down into that green zone, I scaled out 80%. I took my stop loss to break even. With that 20% remaining, it just came and stopped me out, okay? And I'm okay with that. Like, how can we not be okay with that in trading, okay? Let me just rephrase it. I risked 0 of my capital because it was no drawdown. I didn't realize any loss, so I didn't lose any money. I made 80% of 50 pips, and my remaining amount, that the 20%, just got tapped at break even. So in my books, in my journal, it's a profitable trade. Now I got to look back at it. Was there anything that I could have done better? Was there anything that I could have improved on? This is where you got to go back and review your trade. Whether it's a profitable trade, whether it's a losing trade, or it's a break-even trade. Go back. When I analyze everything, I go back here. I see 8 o'clock, how it came up. Yes, we could have bought that, absolutely. But if you bought, did you do anything up there? Okay, I didn't. I was waiting for, I specifically said I'm waiting for COMEX market to open. When I saw those 3 equal highs there, that gave me a little clue saying, how did it not just break above those three equal highs and tap into that double top all-time high supply? Why? Because the sellers, excuse me, are bringing down the market. And then when I saw COMEX 820 open bearish ignited and come down, take out those wicks, you know, it didn't come back up, closed back below there. That candle, you know, I was checking my spreads. I was going to sell that one. Thankfully, I was looking at my spreads at that time, and I didn't take it. It happened so fast, just opened and dropped, came back in. And then as that candle was coming down bearish, I told you, we're barcoding, bearish, bullish, bearish. And it went down, and it came back up. When it was coming down to break that point of interest, I told you guys, I'm going in to sell, and I'm placing my stop loss above the hourly block. I could have gave it more room to breathe up there. I could have gave it more room to breathe up there. I said, if this block is going to hold, it's going to hold. If it's not going to hold, then it's going for all-time high. There's no point in having an additional stop above there, because if it can't hold this hourly block, it's going all-time high. I can pretty much guarantee you that, okay? So I don't need to give it any more unnecessary risk when that's enough, okay? If this block can't hold, if I'm selling down here and this block can't hold it, it's not gonna, even if you have it here or here, it's very risky, okay? And when it started breaking down, came down, you remember this was a green block box here. When it came down, I said, guys, stop loss, break even, no risk. Next part of our job is to take out profit. Whether you're taking out 50%, 75%, 80, 90, or the entire trade, that's up to you. I personally, myself, take out 80% of all trades, take out 80%. I take a lot out initially because I'm a scalper. The bulk of my move is basically one candle, you know, like as a scalper. So I want to take the majority of my profit out, 80%, and leave the remaining 20% with the break even. And what happens with the break even? I don't really care. Obviously, I want it to continue to move down because I can bank more, but the bulk of the move is out. Could I have done anything better on that trade? Now I criticize myself. I write notes. Like this is me doing mental notes in my head. But if you have a journal, you write this down. This trade was taken. Like, how would I do it? Date and time. First thing, let me just go over a quick little journal for you guys. First thing is date and time. Today is Wednesday. What is it? October 8th. Okay. What security am I trading when I'm researching this? Gold, XAUUSD. What time frame did I take the trade on? 5 minutes. What was the time of the trade? I took it at 8:30 a.m. Eastern. Was there a specific exchange opened up at that time? COMEX 820. Was there news in the market? Today there's no news. US government is shut down. Normally we have North American news. No news today. Was there a specific pattern that I traded? Yes. The double top all-time high supply. Was there a point of control? Yeah, the hourly point of control. See, and then now my entry, I can put in, when I took the entry, did I have initial drawdown? No. Did I go into a profit? Yes. Did I follow my trading plan? And yes. That's how you do a journal. And then if I ever want to go review this, I can go back and review it. I know the date and time. I know the setup. I know the security. I know what the pattern was, all of this, okay? So that's how you can do that. I do a lot of things mentally in my head. I'm crazy like that, but I have a lot of shit written down on paper that I read and I read and I read. Till this day, I can't believe that some of you guys don't even do any journaling. And I know it sounds uncool and no one wants to hear that, but you don't know how important journaling is, because when you go back, you can really learn. You can learn from your, like I can go back and learn from this next week and see what I did right. If it hit me at stop loss, like those ones I took last week that stopped me out, I learned from those. I went too impulsive on them. And I had the right direction, I had the right bias, but I just had the wrong entry. It was a little too early. So you see guys, now I'm waiting a little bit more disciplined, a little bit more patient. I'm not being too aggressive on these calls. And now I had a win yesterday and a win today. Okay, so that's how, and coming out of a slump, I told you, this is how you can recover coming out of a slump. Okay, you just build your confidence slowly. I haven't changed my strategy. I haven't changed my technique. I do the same shit I do every single day. It's just how the volume cooperates. That's it, okay? See, I got tagged out, but it's still, you know, it could continue to come down bearish. Guys, I'm going to get off gold now because it's 8:55. We've got a lot of work to do. We still have to do top-down analysis on US30 and NASDAQ, but are we okay to move on? I trust you guys are watching this pattern too. Like you got to understand, there's still the double top is in effect. Okay, it's right there. All we got to do now is if sellers are for real and they can close it back below here, that hourly, come back up. This is a red zone. Gold could really sell down today. Sell down to there, 4,023, maybe down to 4,015. Okay, that is in effect. Okay, that could happen, but history is proving to us that gold keeps going up. Okay, so it could come back up here, come back here, make that a green zone, and break through that hourly, and who knows, we're driving right back up to test the all-time high and could go even higher. Okay, so what I would do is kind of clean up all of this shit and maybe just move this red box back there, focus on this white line, focus on all of this accumulation inside here. You got sellers, buyers, and focus on maybe this white line. What I would do right now is focus on this white line, 4,043, see if blue volume can close above to take out that all-time high and continued squeeze shorts and gold is continued pump. Or watch if sellers can close it below this 4-hour point of control and we could start selling off. That's what I would be watching in the next little bit on gold, okay? I wouldn't consider trading back inside here. It's too difficult. Wait for something to happen at the all-time high or wait something for happen down here. I guarantee you something will happen today, but you just got to be patient with it, okay? So guys, I hope we're all good. Hit the likes on YouTube. If you enjoyed today's call, we talked a lot about mindset, psychology. We got into a trade. It was a good trade. And let's just continue moving along. Let's have some fun, okay? US 30 and NASDAQ, okay? And guys, do you want me to just stick with gold right now just for 2 more minutes, okay? Because I don't want to just leave off. I feel bad leaving off. We're 2 minutes away from the hourly close. So I'll stick with it because if we're hourly traders, look at what's going on. Look at the indecision on the hourly candle. This is what I mean. We got to watch this white line here and this white line today because that's we're going to represent, like even the hourly, this hour had initial buying. We saw it. Comex brought it all the way back down. That's where we sold it down. And now the buyers are bringing it right back up to where it's indecision, 50-50. This entire hour went up, went down, coming back up. It's basically exactly right where it opened again. So next hour, it could definitely continue to drive back up to the all-time high or sellers could bring it back down. Right now, you can see even the hourly has no idea where it wants to go. So this is why on the 5 minutes, it looks so choppy, like inside here, okay? So what I would suggest is continuing. If you're looking to swing trade, you gotta wait for more confirmations. We gotta see more hourly volume close below here. It tried 1 time, 2 times, 3 times, 4 times, right there. Guys, when we were selling, if we closed on those 5-minute candles near there, we would have been dropping. This would have been a much bigger sell opportunity, but those buyers are still there. They're still there. If you utilize the 9 EMA on the hourly, it's right there. We tapped into it and it's going right back up. So this next hour, we could drive, again, fill our wick, and we're not too far away from that all-time high again. But if sellers bring it back down, consolidate here, we could get some selling pressure today. So here's the close in 1 minute. Again, what I like to do is I watch it on 5 minutes. So there's that, for scalping. Look how it's a big bullish ignited candle coming all the way back up. Could close it back here. You're going to flip that red zone green, and maybe we're driving back up to here. And so for that gentleman on YouTube that said Ron was trading against the trend, you see, you were absolutely correct. I was. But I was just looking for that move to come down there, grab my 50 pips, pip and dip, counter trading, and get out. Because I know, I told you guys, yes, I am counter trading, but that trend line did not hold. It didn't get our sellers down there to continue push down. So that's why I'm happy. I got my money and I got out because the buyers are right back in and they got it right back in the trend and they could continue driving through here. So this is where you can switch your bias quickly as a scalper from buying to selling, from selling to buying. Now they're proving that the buyers are strong. Okay, so it did close above there. Zone flip, red to green. Just go through the motions. It's a bearish ignited candle. You see how it opened bearish. So it's going to maybe possibly retest this. Could flip back up, fill that wick, and drive where? To that white line. Okay, you could even extend your hourly zone. There it is. Guys, that's a technical retest. It just came right in the green zone and popping and could potentially drive. What I would also be doing if I was, trading this, I would look at 50% of that bullish candle, find that point of control just in case it can't hold this box right in there and grab a wick. But right now you see how it closed above? It opened bearish, came in, retested, popped the wick. Now it could be driving where? Into there, okay? So there it goes. You know, that could be like, that's what I love scalping. Because sometimes just scalping one candle can get your 10, 20. Sometimes when I'm scalping, that's it. I'm out of that candle, you know? Like I watch it close, open, right there. As soon as it flips that, I'm in. It's 15, 20 pips right there. You know, like if I'm scalping that thing, I'm out. Like sometimes I just, right there, open, close it. Sometimes with a standard lot, that's exactly what I'm looking for. 20 pips is $200 US. And that's it. I don't think about anything else. Just get my $200 and get the fuck out of the market. That's it. That's the mindset you got to have. Sorry for swearing, guys. I apologize. Sometimes I can't even control what I'm saying here. I just get too into it, okay? I apologize for swearing. I know some of you guys have your children around and things like that. But I will give you guys a warning when I'm really going to swear here, okay? Because I like to warn YouTube as well. And then that's when you can put your earplugs on your children or take them out of the room when Ron really goes off, okay? But I like to swear a little bit. Shows a little emotion, okay? So we're going to move on now, guys. We're going to move on. I know I could sit and trade gold all day with you guys. I can do a 12-hour session right now. I'll piss my pants all day with you guys. I don't care, okay? That's how much I love trading. I love it. I love it. I love it. But we got work to do. We got to get to US 30 and NASDAQ, okay? Because we have to respect Wall Street in the next 28 minutes. So let's get going as we're moving here. Daily, okay? So we got to switch focus now. We have to switch. Your mindset now changes. We're not on gold anymore. Gold is a commodity. It's a precious metal. Now we're looking at US 30. This is Dow Jones. It's the industrials. This is kind of shows a snapshot of how America is doing. This represents everything. Oil and energy. You got a little bit of tech. You've got some financials. You've got some agriculture. You've got retail stores. It represents everything. 30 securities represent this. United Health being the one that gets the most weight in here. And then when we go to NASDAQ, we're looking at basically tech. Okay, so we got to change focus now. This trade's completely different than gold. You got to use different sizing, everything, okay? Different mindset. This is where a lot of traders can't shift their mindset to accept that we're on a different security. You can't trade this like the way you trade gold and vice versa, okay? This is a whole different security. You got to have a different. When I come over here, my mindset now switches. I know now we're not on gold. So this is now something else, okay? Look at it. Do you guys see what I'm doing? Double top, okay? Even if these were like 5-minute candles, there's one top, drop. There's another top, drop. Double top, there's the zone, stretched out into the future. I see when it came a third, fourth time, drop. Now it came again. There's a big bullish bar that closed above. That's the first bar that proves to me buyers closed above. What do? Same shit I do on the 5 minutes, I do on the daily. Make it green. This was a specific day. Jackson Hole Symposium, day 2. Powell hinted interest rate cuts. Look at how the market rallied, okay? When we stretch it into the future, if you miss the buys up there, just like, you know, you waited patiently. Now you got to wait patiently for a couple days. 1 day, 2 day, 3 day, 4 day, 5 day, 6 days, 7th day. The 7th day, look, it came right in there and went back up. 8th day, one more time, higher low, came in, and then look at after that. If you're looking to swing trade, this is what you got to be concentrating on. Forget the 5-minute candles. What are you guys even doing looking on 5-minute candles if you're a swing trader? Go start your analysis. See how I'm starting on. Start on a monthly. Start your monthly supply and demand zones. Start on a weekly and work your way down. And stop at 4-hour or hourly. If you're a swing trader, you shouldn't even entertain 30-minute, 15-minute, 5-minute. Who gives a shit about those? Okay? You're focused on bigger moves, bigger time frames. Okay? Get rid of all the noise. Okay, so you see what I did with that? Really simple. Stretch it back into the future. Will US 30 ever come back down in here? I believe so. Will it be next week, next month, next year, 5 years from now? I don't know. When it comes down there, I promise you we'll have that conversation. I'll probably still be streaming with you guys on YouTube. It might come back in there, and we might say, guys, let's buy 45,000, and we're taking it back up to 47,000. Who knows? When that time comes, hopefully we're all alive, and that will come down and we'll be ready for it. How can you be ready for it? Simple. Let me just show you this, and you can do this all day, every day. Right in the middle of the box, draw a line, place an alert. It's like an alarm clock. Today I woke up with an alarm clock. Okay, so I got to wake up, with an alarm clock. Same thing here. It's an alarm clock. If it ever comes down there, it's going to go beep, 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 beep. It's going to wake me up and say, Ron, it's back in this zone. You better look for a trade. I can look for a buy out of there. I could look for a double bottom and make some money. Or it will come down in here, say beep, beep, beep. Ron, you got to look for a trade. And sellers might be closing it below there. If they close it below there, prove to me. I'm going to flip that green zone red. Same point of interest right there. I could be selling the market, okay? But whatever happens, when I get that beep, beep, beep here, I'm looking for a good setup, okay? But it's got a high probability that it's going to continue to go to the upside because a lot of patient buyers are waiting in here, okay? So we're nowhere near this. We don't even need to entertain that. Just zone by zone. Right here, get your eyes to recognize this. How many wicks do you see right there? 1, 2, 3, 4, 5 wicks. That's a red zone. That body closed above. Body closing above, flip the zone. Green. If you missed to buy the FOMO, fear of missing out, look, you had pullbacks that came right in there. You could have bought in there. Remember what I was saying with gold? That drop, you want to buy the high, it came back down 75, 80 pips. Why were you guys not buying, right? Because then you get scared when it's coming down bearish. But you got to trust your zones, okay? You have to trust your zones. If you don't trust your zones, then don't do zones on your charts. What's the point of doing them if you don't trust them? Right? I'm speaking real facts here. What's the point of putting this zone here if you're not going to trust it? Okay? There's no point in putting it there. Don't just put them there to make your charts look fancy. It's, you got to trust this shit, okay? And how do you trust it? By back testing, by practicing. A lot of you guys still these days don't even back test. I used to just back test for 10 hours a day. You know, I see a lot of traders these days. I do a lot of one-on-ones with the guys, and I ask them, are you guys back testing? They're like, Ron, I haven't back tested in years. I'm like, what are you guys doing? What are you guys doing? Like, you can't just test out shit in a live market and over leveraged, and you're gonna lose your money, okay? So this is what we got going on. Trend. What's the trend? Very easy. Connect. A to B. Just connect, 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 connect the dots. We're still trending up. That's a daily trend line. Make it yellow to represent daily. Look at, we're still above there. Now, when will US30 sell? We got to break that trend line, break that zone, maybe break down there, flip it red. Then we'll get a sell leg down to this zone. When it gets down there, it might pop back up. Okay. What if it pops up 50%? Then we got our pattern we're looking for. A, B, C, D, and E, they flush it down. Then when it comes down to there, there's that conversation. Hey guys, beep, beep, beep. We're buying it right back up, right? So just like 5-minute trading, you gotta interpret it the same way on these higher time frames. Okay, so we're continuing to drive now. Now we got 4 bodies that we can analyze right here. Look at gold. Look at gold. Yes, gold retested right there, driving. Did it close above that white line? Yes, it did. Retest it, and we're driving. Did it take out those 3 equal top highs? Almost, okay? And it's very close to going to that all-time high again, okay? So gold is strong, okay? And then if this body closes above, you're going to flip this red zone green. And now the hourly buyers have reclaimed that point of control. Where did that red box come from? It came from that hourly candle. If you look at the hourly candles, there it is. See, when I was saying that had indecision, that hourly candle, but it closed with a little bit of bullish volume, that retest, and look at it. The hourly candle is back filling that big wick that dropped from COMEX, and it could be coming to the all-time high and continuing to drive. So gold is still bullish, okay? Okay, sorry, the reason why I went on gold, someone just told me look at gold. There you go, I looked at it. So there's nothing to explain there. You can clearly see what it's doing. Now, US30. This day, last Friday, we hit an all-time high, orange line. What's our all-time high? 47,065. What have we been doing since there? There's a point of interest. There's where the all-time high closed and where a daily body opened. So right here, let's place a yellow line here for a point of interest. 46,780, make it yellow line. See how we're coming up to it. So I see that day was an impulse, pushed it back down. Yesterday was an impulse, lower high, they pushed it back down. Today, we're coming right back into this location. Do we have bodies of points of interest? Right there. Where do we close? Where do we open today? Close, open, right? Now, when we opened, was it initially bearish? Yes, it was. So this is where I'm trying to put the pieces of the puzzle together, just like I do on 5 minutes. Did it open? Was it bullish ignited? No. It was initially bearish. But when it was bearish, did it take out the previous low wicks? No, it didn't. So it's technically a higher low. Is it still holding the bullish? Remember what I said at the first thing at the start of the call? I said, for those that are paying attention, you guys know that that opening balance of this day, Friday, is still basically still holding that. Yes, they did break it down, come back up, break it down, but no bearish volume has closed below that opening balance. Okay, so if we get a daily bar closing below there, yes, we could break down, but right now it's still holding. So that opening balance of volume is still holding. See that little blue body still there holding. I see impulse. I don't see a black candle that's closed below that opening balance. Therefore, it's still there, still strong, still holding. That's why if you want to recognize it, you can recognize it, stretch it into the future. Okay. Now, what did the buyers do today? They brought it right back up to the opening balance and have been pushing up, pushing up. There's where yesterday opened. Let's, make a point of interest. Let's place a yellow line so we know that that's a point of interest. They pushed above it. We're trading right now basically at the highest point of the day today. See how close it is to getting up to those points of interest. Okay, so we're continuing to drive. Is it going to drive bullish and break? I have not seen a daily candle close above here yet. There was when we hit the all-time high, rejected. Came back up, rejected. Came back up, rejected. There's a wick and a wick. Let's place a point of interest right, right near those lines. You can go right at that one. You could bring it down right there. Or what you could do is simply from this yellow line to that orange line, find where exactly 50% is. This is if you can't guess, guys. This eliminates guesswork right there. You could go to 0.5, keep it psychological if you like. You could also place a block in the market. Right there's your hidden block. And you can see how those 2 days traded right into it, and it's red. If you want to advance that into the future, you're welcome to. Are we going to come all the way back up and trade in there? We'll see. Okay. Is that the hidden block that's going to protect Dow Jones all-time high? We'll find out. Okay. But right now we have a really big bullish candle continuing to push back up, but we have a rejection, and an all-time high rejection. So we know sellers are above us, okay, but we're coming in strong. Let's go to the 4-hour now, okay? So now to make 4-hour sense, we were pushing, there's the 4-hour all-time high. We can see what date was, Friday, 10 a.m. We hit the all-time high. Since then, it came back in there, pushed down, came in there, pushed down, came in there, pushed down, came in there, pushed down. You see how we're lower than everything? Then they really slammed it down. Monday morning, we came back up. They pushed it back down, holding here, coming back up, okay? So this was Tuesday, 6 a.m. It came up, then they slammed it back down, but now we're coming right back up. If we get a 4-hour candle starting to close above here, look, I haven't seen a 4-hour candle close above here, this purple line. Maybe this might be the first one in 46 minutes, and the new 4-hour candle might have momentum during Wall Street to continue to drive and fill that wick and drive back into that hidden location, or maybe the possible all-time high, okay? Some funny shit can open. It could open bearish and next 4-hour come right back down, but this yellow line is support. This yellow line is support. This green box is support. We got bigger support down in there, and we're still above our trend line. It's still bullish, okay? If we go into the hourly now we can see hourly. I can see now exactly which it was Friday at noon when we hit that all-time high, 1 p.m. They brought it right back down. We curled back up. Where was that big drop? Monday, 9 a.m. Wall Street, big drop. We came back up when? Right there. That was, remember, yesterday. Remember we sold Wall Street? We sold it. We waited. We got that sell. Okay, so it sold down, and now it's coming right back up again. So is this the staircase coming up, and then they're going to elevator it back down? Okay, look at here. Staircase going up, elevator down. Staircases coming up, elevator down. Staircases coming up, are they going to elevator it coming down for Wall Street? This hourly candle is closing in 45 minutes. Will it start to close with volume above here? Will it continue to push? Where now? See how I have bodies right here? That's what my eyes are looking at right there. Those two bodies. Stretch into the future, because that's where I know where the critical volume was trading. You can go backwards and back test this shit if you want to see. And then all I have above this red box is filling that wick from yesterday. Are they going to do that today? Are they going to fill the wick, or are they going to just kind of fake out the move up here, and then they're going to slam it back down? Okay, if we get hourly volume close above here, we flip that zone green, we might be filling the wick and getting back up there. Okay, so right now, if you ask me, it's still bullish on the hourly. It's coming up, higher high, higher low, higher high, higher low, new higher high. It's still pushing up, but I still respect the all-time high trend from here to here to here, you know, still coming down. But it is still bullish. Let's go into the 5 minutes. What time we got? 9:15, okay? I got to go a little bit faster now, okay? So these are our 5 minutes. You know, there was the big drop from yesterday, right? Remember our sell? There was where we waited for it to come up. I waited for that candle. Remember, we waited. It closed. That was the retest exactly at 50%. Right there when it broke, I took my sell. I placed my stop loss above there, and we got that move coming down, okay? I wish I held my runner throughout that day. I didn't. I closed, you know, I did my what I do. And since then, it's kind of recovered, coming right back up. There's that block right there. You see, guys? So if you kind of want to just do a short-term trend line just on these 5 minutes, just maybe connect it from like right here to there, A to B, and then just there's your little short-term trend line. I can make it red, you know, like on the 5 minutes, what I normally do, but that's our short-term trend line. So it's still bullish. You know, it's still holding, still driving. If you look at your really silly indicator, it's showing bearish divergence. Okay, we got a high and a new higher high. Its price is going up. Look at the strength is decreasing. That's telling me the strength is decreasing while the price is going up in this bigger block. It's suggesting to sell it, right? But maybe the market, Wall Street wants to squeeze as much liquidity as it can in there before they drop it down. So that's what we got to watch for, guys, okay? So there's US 30. Let's add our daily bar. Wow, okay, so there's the opening balance right there. There's where we came down to the lowest point, driving back up. This is the big bullish volume, trading at the highest point of the day. So if you're looking to sell, you're selling against a big, heavy, bullish candle. If you want to continue to drive with this momentum, let's, you know, buy pullbacks. You're looking to buy pullback at this yellow line, maybe this yellow line. You could look at 5 minute areas where here used to be like resistance turned into support, 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 support. There would be another good area maybe to entertain a buy. Nice whole number, 46,675, you know. So, and then there's where I would be looking for a buy and see if these buyers who bought the opening balance are protecting their opening balance. They would probably be looking to buy there, because if I look back all day today, they were buying there. They bought this wick. They bought right there. They bought this move right there. So why would they not, again, buy over there today, right? So, you know, I take it one level at a time, place more emphasis on the yellow lines because they're higher time frame, right? Okay, so let's just complete the charts with the EMA. We're above the EMA 9, EMA 200. Look at where the EMA 200 is, right at that red line, guys, okay? So when I'm looking for confluence, normally I don't trade with these indicators, but I add them on my charts for you guys. But there, when I'm using it, then it kind of confirms that that location is a great location to maybe buy. You could also do a green zone a little bit above, a little bit below, and maybe pinpoint that area today. If it pulls back in there, could be a good location to watch for a buy, or just see if the market comes down there and see what type of reaction it has in there. What if it comes in there and bounces up? Then it might give you the confidence to do this again tomorrow and locate that similar zone, right? And just, I put it there just for information purposes. If it comes down there, maybe I want to see. Will it buy in there? Will it agree with my red line? Will it agree with the 200 EMA? Will it agree with my hypothesis saying that the opening balance, they're protecting it without letting it break down? If that's a check mark, check mark, check mark, I want to make sure I learn this and I do this the next day, and the next day. On any security, remember, this could be gold, this can be GBP USD, this can be crude oil, this could be NVIDIA, this could be Tesla, this could be whatever the hell you want to trade, okay? But that's now US 30. Okay, I got 10 more minutes. So we got to do NASDAQ now. Okay, NASDAQ, again, shifting focus. This is NAS100. This is majority of this entire index is all tech securities. Not all of it, but roughly about 60% of it is all tech. Out of these 100 names, you're going to see majority of them are tech names. Okay, so this is kind of gauging how tech is moving. Okay, and you guys know it's bullish like crazy. Okay, so on the daily, again, there's that kind of double top right there. Recognize it. It already happened. Okay, so stretch it into the future. Did we close above it with some volume? Yes. Go green now. Stretch it into the future. I would love to buy NASDAQ back down at 22,000 if it comes down here. Yes, I will be entertaining a buy. I get a heavy discount from where it's trading at 25,000, 3,000 points discount, and I would love to buy there if those big buyers are there waiting, okay? But the market has really diverged away from there, okay? So now we got to, again, pinpoint some areas. Right here, I've talked about this multiple times. That's a demand zone. I'm not going to break it down why it is because we got to get moving. If you want, you can watch all of our other videos to see pivot points and why I talk about that zone. Here's another one right here. That was resistance, turned into support now. There's that other zone, okay? Continuing to move up, right? You can see right over here, we've got some good support still holding right there, okay? And then where do we have resistance turn to support? Right here. Here's another one. Okay. This was at this point, that was a red zone. Let me just show you. So you guys don't think I'm guessing or how I'm doing this. You see right there, you can literally see right there when it came in, went back down, came in, went back down, stretching that same shit across. There's the bullish candle that closed above, go green, right? And you're back testing right now. And then you can see how it traded in there on Friday last week. Already happened. Came in there, went back up. Monday, bullish engulfing candle coming right back up. Are we going to continue to hold this? I don't know until the volume gets there, but that zone is recognized there, okay? Now you can see, okay, if you want to draw a trend line, you can see we're driving. If you want to look at your RSI, it's showing us bearish divergence on the daily. It's continuing to make highs, prices going up while the strength is decreasing. But they're not ready to sell it down yet because it has not broke. There was a selling day. Why didn't it continue the next day? Because it opened bullish ignited on Monday this week and pushed back up. There was a selling candle, came down. It didn't close below. So next day went back up with the wick and we got a bullish candle. If we realize a bearish black candle closing below here this week, we're going to flip this little green zone red. Maybe we'll come up the next day, get a wick, and then we're selling down to this green box. Then when it gets down here, we watch what happens. Same shit. Will it come down here, go back up, or will it push? Just like this wick, pushed, broke, did some damage, but came right back in. What if we get a black daily candle closing below there? We're going to flip that one red, then we're pushing back down to this zone. Okay, and then the deeper we get in the depth of market, the bigger the buyers are. Okay, so right now we're barcoding bullish, bearish, bullish, bearish. It's accumulating. Both buyers are accumulating to drive NASDAQ new all-time highs, and sellers are accumulating to drive this shit down. Right now, even daily, long-term swing traders are accumulating. Not us scalpers. We're not doing shit to this volume. These are big boys trading in here. We're little babies, us as scalpers. These are the big boys, okay? But what we got to do is continue to mark up what they're doing. That is an all-time high. When did it get here? 25,100 psychological area. It got there yesterday. Do I have a wick and a wick bodies? Yes. So right now, sometimes it takes two bodies or wicks to identify a zone. Right now, I'm identifying all-time high supply stretched into the future. If we come back up, it might go back down. I can see right there they rejected it, right there they rejected it. So I'm now assuming that when it comes in there a third time, a fourth time, a fifth time, it's a red block. Until the buyers prove to me they can break it out of there and close it above, I will give them the utmost respect and I'll flip it green and I'll be buying with them, okay? Same shit I do on every time frame. Right now, I can tell you we are consolidating. If you don't see that consolidated volume, I don't know what else to tell you. There it's where it's bullish, bearish, bullish, bearish. We're right inside here. Remember, gold on the 5 minutes is trading in that shitty zone. NASDAQ on the daily is 3 moves. It can continue to trade inside here for the next couple of days and continue to accumulate. It might break out of there, retest this, new all-time high, or sellers are accumulating more and they're going to close it below here, flip red and drop, right? Okay, so that's what's going on right now. But, you know, I'm not a daily trader to sit and watch this daily candle all day. I'm a scalper. So I got to break this down now, okay? So I got to break it down by going daily, 4 hour, 924. Fuck, I got to move. Okay, 4 hours are making, you know, came up there. There was a double top, but when they dropped it, the buyers brought it right back up, closed above, pushed, pulled back, zone, coming back up. In there, big drop when Tuesday 10 a.m. yesterday, that sell, and look at, so right there, that 4 hour candle, that's a significant candle. We're kind of doing staircases coming up. Are we going to elevator it down? Find this 4 hour candle. That was yesterday, going into 6 to 10. That was our session yesterday. There's the open close, okay? Where's 50%? 0.5, let's draw a white line there. That's representing yesterday's. If we want a point of control that 4 hour, there it is. There's our bearish point of control. We've been trading in it last 2 hours and it got rejected, right? So there's your point of control. So it's trading right in there. Are they going to drop this shit down, or the buyer's going to close it above here and we're moving to the all-time high supply, okay? If you want to get rid of that all-time high supply, you know, because I have it stretched in the future, maybe just go back there, okay? And then focus on this zone right now, okay? You guys understand how I just moved that back, but if it starts breaking out of here, right, then I just move that zone into there. I don't want to do this to confuse you guys, but we got to focus more on this point of control from yesterday, because that's what we're trading into right now, okay? So it's coming in right now. Will they drop it down? Hourly, there it is. There's the M top on the hourly. Came up, came back down, neckline. Came up, they grabbed the liquidity yesterday, 9 a.m., remember, 9:30. I sold US30, but NASDAQ very similar. There's M top, drop, they dropped it, they broke that. That was a big drop, but when it came down here, the buyers are buying it up. Barcoding inside here, are they going to continue to take it out and drop it, okay? That's what we got to watch. I know, guys, 4 minutes away, we got to really, really move faster, okay? Just looking at some hourly zones. It's just, like me as a scalper, I would be looking at this pivot point, body. I would draw like a white line right here as a scalper on 5 minutes. I'd like to see if 5 minute volume would close below here and then maybe look for some short scalps coming down, but buyers are still holding this, okay? So we do have, and me as a scalper too, I can see the white line, body. I can see a body and wick in there. If I draw a little green box right there, I'm showing you where the hourly buyers are located and where they're still holding the market right there, okay? And let's go to the 5 minutes. So you see that little hourly box. I can see that 5 minute candle came in, back up, came in, back up, came in, going right back up, okay? Now all we got to do is, remember what this red zone represents, that 4 hour point of control from yesterday. That's the exact middle, that white line, okay? And then above us, there's the all-time high, and then there's the all-time high zone if we need to advance that into the future. But me as a scalper, I see right there, 5 minutes right there, and right there. I would be having a line located right exactly right there. Right there, I see that little bullshit above there, but I see right there how it was hanging around. And if we drive right back up, that's where I'm watching in there, okay? So right now, this is what we got for NASDAQ. Let's add our daily bar. This is our daily bar opening. Lowest point of the day. Okay, so I didn't put those on, but I can put them on now. That's our purple lowest point of the day. There's our purple highest point of the day. Our opening balance is right there. Okay, I can get rid of the white line because it's at the opening balance. See where we're getting all of that hourly support? It's at the opening balance. See when it's driving down? The opening balance is not breaking currently. So we were just talking about that, how the opening balance, the buyers are still holding it strong, okay? Let's add some EMAs if you like. 9 is the green line. We're above it. 200, we're above the 200. We might even be getting a bullish crossover where the 9 crosses over the 200 and continue to drive through. We need as much momentum as we can to break through a 4 hour point of control, okay? Let's put these two side by side now. You trade which security you like. I personally will trade whichever one looks better, cleaner. But if I had a preference, I always like to trade US30, okay? So we got both of them. US30 on the left, NASDAQ on the right. 1 more minute to go into Wall Street, guys. So right now, I got to switch off of gold, look at my spreads, change my sizing from gold, because you guys remember I was trading gold, change my sizing. I'm now looking at US30 and NASDAQ, and you can trade right off when market opens, or you can wait 5 minutes. We can see what happens. Good luck to everybody. Please don't over leverage. Don't risk too much. Let's see what happens. Oh, I need to breathe. Can I grab a drink of water or coffee? They've already pinned NASDAQ. Shooting star candle. They pinned US30 right now. So will that momentum carry forward in Wall Street and start dropping? Like if you ask me, following the volume, it should. But, you know, it could just fake out, come right back up. Here we go. Okay, look at just how the candle opened blue. There's sometimes you can't do anything about that. Right? That's why I hate trading right into a market open. That candle came in, got rejected, was a shooting star, and then as soon as it opened, boom, just blew. There's nothing you can do about that, right? And look at that, how it dropped, got a wick and continued drive. And that's the first 20 seconds, okay? So you're basically like gambling
to tell you the truth, if you're trading that shit. Best is to wait 5 minutes. What's 5 more minutes to wait? If we've been waiting for 3 hours, 5 more minutes, not going to kill us. You can wait also 15 minutes, okay? It's showing bullish. Now, let's see how it will interact at the highest point of the day. Let's look for clues in the market, things like that. Sellers now are coming back in, okay? Now they're really dumping it, so they trap those buyers now. Okay, look, holy shit, okay? US 30 is dumping. Are they liquidating all of these longs? Okay, if you were in buys and you didn't do anything at market open, they're attacking you. Okay, look at there. That was that. Remember that good buying zone, discount zone right in there? What if, like, you know, you wanted to buy the high up there, and now look at that discount you're getting down in there. But you got to have the confidence to take that right away at market open. Otherwise, we're still waiting. Okay, so you see how it came down right there? Remember our box that we just did? I just finished with this 2 seconds ago. Now someone's going to say to me, well, Ron, why didn't you take the buy? Right? It's a valid question because this is Wall Street now. That was just the first 1 minute. Yeah, I could have bought. Yeah, I would have been in profit, but I could continue coming back down. What happens? It comes down and closes below there and then continues dropping. Okay, so if you got the buy, congrats. I didn't, okay? I told you, I'm waiting for the 5-minute candle to close. See, NASDAQ is now just broke for a new daily high. Will it close above there? Remember, right there is 50% of that point of control from yesterday's big bearish candle at Wall Street. So we're retracing right back up where we were yesterday. Wow, okay? So look at US 30 coming all the way down. Just a quick look at gold. Okay, so gold, look, gold equal highs at the all-time high. Unbelievable at 910, and now they're chopping it back down. Okay, don't ask me, guys. I can't even explain that anymore. Hopefully, you guys know how manipulated these markets are. Okay, so see what I mean? They're not the same securities. Tech is bullish. NASDAQ is bullish. US 30 is dumping. Okay, so it broke through that zone like a knife cutting through butter. Just sliced right through it. Now we're coming to the opening balance. Okay, look at now the daily candle of US 30. Remember, it was a nice big bullish candle all the way up here. Look at Wall Street. How Wall Street says, I don't give a shit about this candle, and just cleaning it right out. All of these buyers all day that were holding their position takes 2 minutes, and look at the market liquidate you. Okay, this has happened to me a lot of times, and that's why I take my profit and I run and I don't look back. Because look at this. This is nasty. Holy, I don't want to swear, guys, but this is nasty. Now we got to watch where, look at, they flipped the entire daily bar. Anybody sell this? If you got it, great. Congratulations. Oh man, but if you were holding buys, please guys, you got to learn how these markets open up. 930, 820 for gold. These exchanges are like, they could really mess you up. Look at this candle. We still have 30 seconds and it's coming almost to the lowest point of the day. Okay, so look at this zone. It might represent 50% of this entire candle, just this same zone. We don't even have to pull out our tool. Okay, that's how coordinated the markets are. Unbelievable. Holy shit. So do you want to just buy a falling knife, or do we want to wait? Okay, so that zone is now red. Look, it opened ignited bearish too. Holy shit. So, you know, it opened ignited bearish. Okay, so it wants to now test the lowest point of the day. What do I have below that green box? Right there. See all of that clump of that cluster of volume right in there? Okay, and it's right at 50% of the green zone. Okay, so it just tapped into the lowest point of the day, right? Let's see, will it continue to go down? I know, holy shit. There's probably a lot of traders that are getting screwed right now trying to buy, okay? I understand. But we don't just buy because something just falls, okay? You got to use, like, I know it hit this zone and says, Ron, why didn't you buy there, right? Because it's Wall Street. This is not just a normal 5-minute candle. Okay, so I told you my rule right off the top. I'm waiting for the full 5-minute candle to close, regardless where it went. Okay, so now I'm basing that opened ignited bearish, came down, took out the lowest point of the day. The candle just flipped, but I don't want to just buy that because there's so much selling volume. I got to see a bullish candle start closing strong, maybe see a pullback, a higher low, then continue. I got to see maybe an inverted block in the market. I got to see something. NASDAQ closed above, broke that point of interest, that 50%, closed above it. Look how it came, scaled back, retested, holding. See that fair value gap now? From that wick to that wick. See that there's a little bit of imbalance right there from Wall Street. If you can pinpoint that and you want to buy, there's still a little bit of imbalance in the market right there, that green zone. See the wick right now in that wick? This body of blue volume has not been transacted, okay? It might come down in there, pick that up, and then go back up. But I would continue to wait. The market is too volatile right now. I'm still watching this. So even if you bought that candle, it came up, you're still in drawdown. Why? Because you know how it opened ignited, right? That should keep you holding that the sellers are in control of this bar right now. My goodness. Okay, so this is what I always say, FOMO. What are you guys FOMOing about? If you wanted to buy up there, you're getting now a 200 pip discount. Why are you not buying here, right? FOMO is for idiots. FOMO is for fools. It should be called FOMO is for fools. Don't always just FOMO. Who gives a shit if you miss a trade? Because look at when it comes down, okay? You're not missing out on anything. I am telling you, you're not missing out on anything. Okay, if a trade goes, who gives a fuck? Sorry for swearing, but who gives a shit? Okay, because look at how you could have destroyed your entire account today just because you wanted to buy and thinking, oh, it's got to go, I'm missing out. You're not missing out on shit. Okay, sorry for swearing. Look at the size of these candles right now. Now think about your sizing. When you go in and take a trade right now, think about what you're trading. Think about your sizing, okay? Because if you go in drawdown, these are heavy candles. These two candles have eliminated everything today. From when the market opened up. Look at all of this entire day of trading, 10 minutes taken out. That's how ruthless these markets are. Why do you think retail traders lose all their money, blow up their accounts? I'm showing you right now. These are heavy candles, guys. This is like, I haven't seen candles like this on US30 in years. Government shutdown, no trust in the markets. Guys, this is tough. Even being on the sidelines right now, you're learning, okay? Holy shit, this is an ignited bar that might even close below this block here. Look at the entire daily candle has flipped into a shooting star, okay? So I'm looking for, if you want to buy, you got to understand you could be buying right into big sellers looking to sell everywhere here. Today is bearish on US30. NASDAQ, other story. It's going bullish. Okay, 30 more seconds to go into the close. Now you see it's transacted right into that deep zone. Is it going to come back up? Will we have a sympathy rally on the way up? But when we do, like I haven't even based off of 50% of that first 5-minute candle because I know it's right by that red zone I have right there. You see? So I can just, there it is. Just make it go up to the 0.5. There it is. Okay, so I have the immediate point of control and 50%. If it comes all the way back up, right? If it comes all the way back up, that would be a nice buy, but you got to know what block you're trading in because they could just dump it right back down on you. Holy shit, like NASDAQ is continuing drive, okay? So this is where I kind of see a transfer. Maybe Sellers of US30 are selling, realizing profit, and they could be taking their flow, their money flow, and buying tech. You know, it could be a transfer, money transfer, going from one index to the next index. Okay. So look, bearish again, bearish ignited, continuing to drop. Okay, now below, this is like the last things that have saved the market right here. This is the absolute bottom right there, and this is another one where it created the higher low and pushed up. So let's see now, like, is it going to be saved down in here? Holy, this is ridiculous, guys. I can't even keep this on my charts right now. Maybe we wait for the full 15-minute candle. Look at this. This is unbelievable. This is taking out everything today. Everybody that held a long position is getting liquidated. That's why, guys, I pip and dip. I don't have the stress to deal with this. I don't. That's why I like getting my money and get out and stop worrying what could have happened after the fact. Okay? That's why I like scalping. You're either in and out, you make some money, or you lose some money, but I couldn't deal with this shit. If I was holding that trade all day, even as a swing trader, man, it's tough. Okay? And whoever said trading is easy, good luck. This is the hardest skill to learn. What's the plan, guys, for US30? What are we doing? Do you guys think we should be buying, or do we continue waiting, or should we sell pullbacks? What's the plan for US30? You're buying, Kira? Okay. We still haven't even seen a bullish candle being produced. Okay, so that's another clue. Some of you guys that want to buy, we haven't even seen a blue candle close. Okay, nothing. We've seen buyers buy, but then they continue to get bullied back down. So in order to buy, yes, you could be buying, but other buyers are waiting for at least a confirmation of a bullish candle. Okay, that could be where you're waiting patiently for that. Okay, I know that this is nice. You could be buying that, but also remember this candle came up and then it slammed back down. So you are buying against this heavy trend. Yes, it could retrace up 50, 100 pips because we've already had 200, 300 pip drop, but that's called a dead cat bounce. You got to be very disciplined with what you're doing. Like, for example, if you bought this candle right now and you're up 50 pips, I would definitely be at a break even. Because if it comes all the way back down, you don't want to go deeper down into drawdown. Be at a break even. I would be even, if I was in this candle, I would be realizing, grabbing some profit and just continuing to watch where it would close, okay? Because we still have lower high and lower lows. Sellers could just continue pushing the shit down. Until we see one bullish candle print that can give us a little bit more confidence that there's buyers that can actually close with conviction, I'm waiting, okay? This is where, if you're entertaining, feeler trade. If you want to go in with a buy, go in very, very small, okay? Because then if you get stopped out, it's just a small stop out, very minimal. It's not destroying your psychology. It's not destroying your account. You can easily close it and regain control of your trading, okay? Otherwise, you see, see how it comes up, as sellers, are continuing to offer and offer and offer, continue to come down. Now look at US30, NASDAQ. Came right to the top, now coming back down. Remember this little green zone that I showed you had a little bit of imbalance? Maybe it will come in and transact in here and maybe pull itself back up. Let's see, let's watch, okay? Because that is what you guys call a fair value gap, right? So let's see what happens in that fair value gap. We're trading right at 50% of this zone, right below the lowest point of the day. So they're pulling liquidity from the lowest point of the day. Will it come back up? Okay. And then it could just be one single leg move coming back up. Then they push it back down. Then we got to look for a double bottom. Okay. But it could just come right back up and then sell right back down. Right. So I'm waiting. Here's 10 seconds, and we're getting a new 15-minute candle opening as well in 5 seconds. So this is representing the first 15 minutes of market open. Okay, so we closed. It's a bullish pin bar, okay? So we got a pin bar closing at 50%. Now we just opened up bullish again, okay? So are the sellers going to continue to draw it down, or is it going to hold with higher low support, okay? which is one block I'd like to see buyers close above, right above here. I want to see if buyers can close it back above the purple line. That was the previous lowest point of the day. Then I know this is how far they grabbed liquidity coming down below. But if buyers are here, I'd like to see them at least show to me that they can close above here. If they can't, sellers can sense weakness and continue offering and continue to push this shit down, okay? And this is a new 15-minute candle as well. So there's your 15-minute candle. This one could be opening, filling that wick, and continue dropping on the 15-minute, okay? So that's why I'm telling you guys, it's not a good idea to entertain buys currently. We got it. It's consolidating still, consolidating. Imagine learning to trade. Imagine today was your first day trading. Wow. Like this is difficult markets, okay? Even for an experienced trader, this is very difficult. If this is you're just a newbie learning, I would recommend, guys, demo accounts, okay? I know it sounds silly of me to say this, but I don't care. If you guys are want to make fun of me, I don't care. Like, you got to understand, guys, this could destroy you in literally in minutes if you're on the wrong end of that, especially if you don't know risk management and you over leverage. It's just, guys, please take your trading a little serious. Yeah, could be your first and last day, you know, Victor. Okay, now we got a nice bullish candle. Okay, that's nice, but it still has a long way to come up to prove to me that this is buyers, okay? So it could just come right back up and it could push it right back down. That's why this is our first bottom. It's good. It held the green zone. Will it come back down? Can we buy maybe the second bottom? Okay, but if you bought in, fantastic. What I would be doing is just taking your stop loss, going to break even, okay? Reducing risk at all cost. I'd like to see if it can get back into this zone here to see, this is the point of control. This will see if the sellers are still in control or buyers can regain control right in here. Nice big bullish candle coming right through here. Still has a lot of work to continue to drive up here. But if you got to buy, excellent, okay? Excellent. But you got to think now, you're trading into that first 5 minutes of Wall Street. That's that bearish point of control that we talk about every single day. And you're also having your EMAs crossing down. There's a 9 crossing below the 200. That's a bearish crossover located inside that zone, okay? So as a buyer, you have to recognize what you're buying into. And as a seller, you got to understand, do you want to continue to sell with this momentum back down? And then when you're selling back down, you got to know that buyers could be waiting for the second bottom down in here. If it sells down and closes below here, then you're going to have another floodgate of selling coming in the market. So we've now established, like when you're sitting back and watching, we've found the first bottom. Okay, so we know it could come back in here. This could be the neckline. It could come back down, find a higher low right there, come back down there. So we got to go through all of the motions again. NASDAQ is still pumping. Gold, what's gold doing? Okay, so gold is below here now. Okay, again, back. Remember when we originally were selling? Gold is back below there. It's back out of that consolidated zone. We've kind of lost this one right here. So this is where gold could really get some selling pressure and maybe push down if sellers can step in right here again. Okay, now you have where it got rejected at the all-time high and pushing back down. And guys, if you're in buys, okay, these are big body candles, you know, like let's say the open of this body and you're in a buy. Guys, that just drove about 100 pips, okay? Up to there is about 75. That could be your daily goal. If you're just looking, you know, for 50, 75, 100 pips, that could literally be your daily goal and you're clocking out and you're done for the day, okay? And it could still advance back up and drive back up to this red zone, okay? So they pinned it down. Look at where it closed. at that yellow line. Remember, yellow line are daily points of interest. So sellers are in the market, continue to come back down. Where's, again, 50% of that bullish candle? It's got to be somewhere right around there. Okay, let's not guess. Open, close. 50% is exactly right there. Will the buyers maintain? Will they catch a wick right here? So sellers are bringing it back down. That's why I say, guys, if you're in profit, don't be scared to take some money out of the market, because now it can literally come all the way right back down. Okay. Again, NASDAQ closed above here. You got to go green. Go through the motions. Okay. That's why I hate, guys, counter trading when you don't know what you're doing, because it gave you beautiful, some of you guys bought this 100 plus pips, and if you don't do anything, yes, the markets can eventually come right back down. Okay, so it broke that 50% dropping. Remember the previous purple line, that's where they grab that liquidity. Let's see if it can continue to hold as support. Okay, so now we know where our neckline is. It's right here at the yellow line. Did it come all the way into this zone? No, it didn't. So now buyers are stepping back in. 100, 2.44% today. Congratulations. That's big time. 2.5%. You're done for the day. That's it. Go enjoy your day. And NASDAQ is continuing, pulling back, driving, okay? Okay, look at that highest point, 24,999.08. Oh my God. Like, it's ridiculous, these psychological numbers. Look at that, look right there, the highest point. Look at it, it says right there, 24,998.08. Okay, and you see how what goes up can easily come right back down. I'm not trying to sound like I'm an asshole here, but I want to be real with everybody, okay? Because I'm a scalper, guys, and that's why you got to understand my mindset. When I'm countering, just like that gold trade where I sold and I was countering, that's why I grabbed my money and I got out. Same with if I was buying this. I guarantee you I would have said to you guys, I'm on a break even and I'm taking out 80%, rest is at break even. Because the trend is, right off the hop is huge sellers. That looks like a counter pullback. Sellers could continue just driving this shit down. Now we got to see double bottoms, right? You got to go through these motions. It takes a long time to develop a trade, right? If you want to go through detail, everything. We could have scalped each one of these individual candles. If that's what you want to do, we can do that. But you got to have the discipline to get in and out. A lot of you guys don't understand that. So then it makes my job harder trying to teach scalping here. Even if I sold this candle, I probably would have been out right now. I don't like doing woulda, shoulda, couldas. I don't trade like that. Because everyone says it's easy. Oh, you could have bought that, you could have sold that. I understand. That's why I don't want to just talk like that. But okay, so now it's testing again down in here. We don't have a bearish body closing below here. There's a wick, and a wick. This candle is closing in 60 seconds. It's a nasty candle. It's engulfed basically all of the buying volume, the blue volume behind, right? That's why I say, guys, if you're countering, you got to know exactly what you're looking for. If this bar closes all the way back below there, this green zone is going to flip red and we can continue to push down. Wow. Like, sellers are strong today. Oh, Mohammed, you sold this long solid candle on US30, one candle. Wow. Congrats, bro. That candle alone is 100 pips, okay? Each one of these candles is basically 100 pips now. It could be barcoding with 150 to 100 pip candles now. So if you're trying to trade with a 20, 30 pip stop loss, forget about it. You got to really open up your range now. You got to decrease your lot sizing. Omar, you had a green day turned into a red day. You screwed up listening to another trader instead of believing in yourself. Yes, Always believe in yourself, okay? You can look at other traders, you can look at me too, but just utilize what I'm saying, but you believe in yourself. Some of you guys are always trading against me. I'm buying, you guys are selling. It just believe in yourself. Go with your gut over anybody else, okay? I'm saying that too. I don't trust other traders myself. I'm telling you the honest to God truth. I trust my own instincts. I trust my abilities. I might listen to what other people are saying, but I have never, ever taken a trade by listening to someone else. I'm telling you guys that for facts, okay? Listen to yourself, all of you guys, okay? Nobody knows more than you. Don't second guess yourself. If you have a gut feeling, you go with your gut feeling. Okay, my gut feeling right now is telling me I should be selling, right? That's my gut is telling me that. But also, I could sell right here and then it comes right back up because it's still inside this green zone, right? So if I'm looking to sell, then it could be just an impulse break. I still don't have verification of the sellers closing below this with conviction. So I'm just telling you, my gut is telling me to sell here, but I know that a wick could come in and put me in drawdown back above here. Notice how I have not changed this green zone to red because I don't have verification that the sellers have closed it below there. Came very close there. This candle still has 3 more minutes to go. NASDAQ is still running, guys, okay? So NASDAQ is moving bullish right now. You can see how they're moving opposite direction. I don't understand your question. Am I always explaining that much when my trade is going on loss? Yes, I'm trading live. So when I go and draw down, I'm explaining it to you guys. When I get stopped out, I'm explaining it to you guys. What else? What do you think I'm doing? When I get in a trade and I get in a loss, I'm not talking anymore. I don't understand what you're saying, okay? Pay attention to what's going on the call. I explain everything. When I'm taking a trade, buy or sell, I explain everything when I'm in profit. I explain everything when I'm in drawdown. I explain everything when I get stopped out. I explain everything when I go to break even. If you can't hear, that's on you. I do play-by-play analysis, just like a sports game. Play-by-play. Whether I'm in the trade or I'm not in the trade. I'm here to help you guys, believe it or not. Okay, so you see, guys, my gut feeling was telling me to sell. But gut feeling is not always everything in trading. I need confirmation. Confirmation beats gut feeling. Okay? You guys got to understand that. We all have gut feelings, okay? But confirmation will take care of all of the gut feelings. Okay, so you see how it came down? Buyers are still inside this location. Still inside here. What about gold? You guys just go through the motions again. Gold is right back in this consolidated zone. Is it back above there? Yes, it is. Did it come down to that white line down in here? Yes, you guys know why I have that white line there. That's that 4-hour point of interest. I told you guys this earlier. 4,028 if it comes down there. That's the best buying opportunity, and it's coming right back up. What else do you want me to tell you? Okay, now, see how it came? It's coming back down. Will the sellers close it below here? And that doesn't mean if they close it below here, that's it. I'm automatically going into a sell. It means that I'm converting this green zone to a red zone. That's what that means. NASDAQ is just on a tear right now. Okay, so tech is non-stop. That's why sometimes I like to trade just by myself. You know, where I don't have to keep explaining things to everybody and I just focus on the candles, you know. But I enjoy coming on YouTube, guys. I enjoy this, but sometimes it's just nice to just trade alone and just watch candles yourself. Okay, so again, it did not close below there, okay? So it's still a green zone which represents buyers. They could still be in the market. If you're looking to entertain a buy, you could. But then just keep in mind where stop loss could be, right? Okay, there's a big bullish explosion. Now, when you see that, it took a big order. It got a big order, okay? So what I like to see now is, will they reject that quickly down? Will the sellers reject it down quickly? Will it refuel itself? Is this the bar that's going to break out? If that's the case, then it's got to close above here, okay? If this is a strong bar, then it needs to close back either above 50% of this bearish candle or back above this green zone. And this is 10 a.m., right? So now it's a new hourly candle. So that could just be that hourly momentum that just explodes, and sellers could, continue to push this thing down. DC, do I look at 1 minute? Yes, I personally scalp 1 minute, but it's too difficult to do on YouTube. But look at the beautiful double bottom on the 1 minute. Oh my goodness. If I was scalping that 1 minute candle, I don't want to say woulda, shoulda, coulda, because you guys don't believe me what I would be doing here. But if that doesn't look like a perfect double bottom to you at 10 a.m., 10:01, I don't know what to say to you. But that looks beautiful in the 1 minute. Wow, NASDAQ, 10 a.m., bullish ignited open driving. Holy shit, okay? So we're not too far from that all-time high. There's that orange line. Now it's trading in that all-time high zone. I would be focusing on that red line right there, 25,065. Oh. Okay, but we also have a double bottom on the 5 minutes. Higher time frame, coming down, back up. There's the neckline. Came a little deeper down. Okay, second bottom, coming back up. There's your W. Can it close above? Will it retest this? Enough momentum to drive through that point of control from Wall Street, that first 5 minute candle. Maybe get back up to the highest point of the day and flip today's daily bar. Or sellers are going to continue to be here and push this thing down. You bought the double bottom on the 1 minute? Yeah, it's nice. Nice buy, beautiful. But you see the 1 minute, there's their neckline, okay? That's how it looks on the 5 minutes, the yellow line. The yellow line is the interest point. That's our daily point of interest. I'm going to stick with us for 5 more minutes, guys, and then I got to take off. Dave will be coming in post New York. And we'll be back tomorrow morning at 6 a.m. Guys, we have a webinar, a real quick 1 hour webinar today at 6 p.m. on, we're going to go over right here, Trading Toolbox, some tools. I want you guys to get to know how to use your tools. Real quick, 1 hour. And maybe we'll just go over a couple indicators. House Speaker Johnson is holding a news conference. That guy's full of shit. Don't get me started with him. That guy's a fucking weasel. He's got that smirk on his face. He's one of those guys you just want to give him a backhand slap across the face. Sorry, YouTube, about that, but he's just got that fucking face. He's full of shit. Every question he talks about, he's lying through his teeth. He's one of those guys, if I saw him in the public, just one backhand slap right across his face. Just stop fucking lying to the people. Right, with that, I guarantee you we might have a strike on YouTube, guys. Remember, if we get shut down, it's not because we don't want to be here. We want to be here with you guys. It's YouTube that gives us these strikes. Why? Because I tell you that guy's a fucking weasel. It's the truth. If you guys support that asshole, good luck on you. Just listen to him in his conference. When people ask him a question, like if you ask me a question, I give you a straight answer. I don't beat around the bush. You tell me something, I'll give you an answer. And I'm not, This guy, you ask him a question, he'll figure out every single way to get around it with that smirk on his face. That's what gets me, is that smirk on his face. If you guys don't know who I'm talking about, check Mike Johnson, the Speaker of the House. Okay, anyways, it closed above. Okay, closed above that daily position. Are we going to get a little bit of a drawdown pullback, or is it going to hold and continue to drive up? Okay, so 50%, that red line right there is 50% of that bullish candle. It is holding. Okay, so can it continue to hold? It's holding. Will it continue to refuel itself? It's refueling. Will it have enough momentum to clear through that red zone right there? Oh man, I really want to get into a trade here. It's holding. I'm waiting just to see if there's going to be a quick little pullback. Still waiting. Okay, it's coming down now. Okay, so will it get a quick wick and come back up? Or will it come a little deeper into the pullback zone? Okay, so it's coming down, bearish, picked up a wick. Okay, it's still hanging around. You see, it's this small little doji candle. It's unusual trading volume for, like Wall Street. It's a doji. So it could come down deeper. It's still holding here. I would love to buy down here at the red line, but right now it's still holding. So, I might not get that opportunity on this candle. I might have to pull the trigger early. Looking at the time, there's 3 minutes left on it. SST buy signal. Okay. Okay, so I still see it's coming a little deeper. It's not like bearish engulfing, coming all the way down. It's still got a little drawdown on it. Still holding. Okay, holding. Wow, like look at this little candle still holding. Still there, okay? Okay, I'm going to buy. I've had enough. It's been accumulating for 2 minutes. I'm going to buy. I'm going to see if we can drive right back up to that red box, maybe to the top of the red box. Okay, so I'm going to buy. I held, and I had enough. And so I'm looking, if it can come just right back up to the red box, that's about 30 pips, maybe I can reduce my risk. If it can get up to the midpoint, red line, 40 to 45 pips, right in there. And then if we go higher, obviously it's 50 to 60 pips, okay? So stop loss, I could go really tight, right below, it's already in profit, okay? So there, right there. I'm going to a break even, up 25 pips. I'm at a break even, guys. That's quick scalping right there. 25 pips, break even. Okay, you could be closing out if you like. That's a quick scalp, guys. You want to learn how to scalp 1 minute? That's a 1 minute scalp. You get in, get your 25, 30 pips, and get the F out. Okay, I'm at a break even, so I am holding to see maybe if this volume will continue to accumulate and just get a little higher right up to the midpoint. Okay, but I'm at no risk right now. Okay, so that helps me understand controlling emotions. Worst case scenarios, they bring it down. I get stopped out at break even, and then I got to go back and say, run. Why didn't you take out any money? Are you being greedy? Okay, let's hopefully this thing can continue to build. It tapped right into that 200 EMA, that purple line. Let's see if we can just get a little bit of a break just above it, okay? But you see, guys, I wanted a deeper pullback. I was holding. It was that small doji candle. I saw it accumulating, and said, that's it. I got to pull the trigger. So you got to eventually, decide what you're going to do, okay? Let's see if we can continue to pop our high and, just drive a little further. Worst case scenarios, I can live with a break even, okay? It's not what I want, but I can live with it. Okay, so it's still building. I'm still in it, still holding. Oh, I'm walking you guys through the trade like that gentleman asked me. I'm walking through, I'm still holding it, watching it building at its point of control. I'm also watching this wick right here. Can it continue, to get above this previous high? Now we failed, so sellers could really slam this down. And then unfortunately, so it closed. I didn't get the close. that I wanted above that red line just opened. So now it's probably going to come down unless there's a quick little wick, which it's got to get very, very fast. Nope. So it didn't get it. And then you see, guys, you know, right at that zone or the 200 EMA, as a scalper, you got to kind of be very disciplined with exactly what you're looking for, because otherwise it could come against you. As a scalper, you're looking for 20, 25, 30, 35, 40 pips. I'm not looking for 80. I'm not looking for 100, right? Okay, but it's still in it. Nice pullback, nice hammer candle, driving. Now, with this momentum, can we continue to push and create that new high above there? Also, if we're still in this trade and it's hanging around here, can we close with blue volume above this red line so we can make this resistance going into support forward? With this volume, I'd like to break this high right now. I don't want to see like this lower high equal highs. Let's break it and let's continue to drive right into right there. That's where I'm going to take out 80% at that red line if it gets there. So far we broke our new high. That's measured from where I entered to there. You know, regarding your spreads and things like that, could be about 40 to 45 pips for you guys, okay? And if you're trading NASDAQ, it's approaching that red line right up there, okay? Guys got that? Still holding it. There it goes, there it goes, there it goes. Okay, I'm exiting 80% right there. The rest, 20%, is at break even. Do you guys understand? That's perfect. 2-bar trade. If it continues to drive, I've got a runner for that. If it gets up there, 60 pips. The top yellow line is 70 pips, and it's yellow for a reason. That would be my maximum move. That's where I would be closing my entire 20% right back up there if it gets up to the yellow line. Okay? Got that, guys? W's in the chat. Thank you. Thank you, guys. Okay? I was going to end the call, but, you know, that trade, you know, it was saying, Ron, you got to pull that trigger. Guys, I'm happy I got out of my slump. Thank you to you guys. You know, you guys helped me get out of it. I appreciate you guys letting me, you know, get through it myself. Even Dave messaged me, and Dave knows me like a brother. Dave said to me, Ron, are you okay? I said, Dave, just give me 24 hours. Let me go in my sauna. Let me do my shit in there, and I'll come back a different person. That's how, guys, I want to do also a webinar on mental health because I got a lot of messages saying, Ron, you're not the only one going through shit like this. So I want to do a private, that will be on the VIP with the lifetimers. It's mental health. It's very, very, like, it's strong, guys. I know a lot of you are dealing with mental health. I know it's got nothing to do with trading, but I know what you guys are going through because I have one-on-ones with a lot of people that have lost families due to trading because they're gambling. I don't want to talk about one story I had with one person. They tried to commit suicide, and I helped them through that. It was difficult for me. I'm not a psychologist, guys. So, you know, I'm learning with you guys, but I'm a human being. So I know what people are going through, and I have a heart. So if you need someone to talk to, I'm always there, just like you guys are here for me too. I appreciate you guys. But, you know, if you're in this trade, please take some profit out, go to a break even, reduce your risk. See, we took 2 trades today, 2 profitable trades, a trade yesterday. We're compounding. We're building our accounts together, right? And we're building confidence. And you're also learning. So just let's continue this, you know, and don't get greedy in the markets, right? I know a lot of you guys want more and more and more, but greed will kill you in the markets. Look at right here. Like, just look, guys, all day today, like these buyers, you know, were buying and holding, and 10 minutes market open took everything away. That's not right, okay? Markets are ruthless. They don't care about you and I. So just please, guys, grab some money, have a realistic daily goal, and let's do this every single day. We're not going to become millionaires overnight, okay? You got to understand that. It takes time, okay? We're not here to become millionaires. We're here to learn financial skills, learn financial freedom, and get better and better. Make sure you're a better person than you were yesterday. That's how you improve, okay? And guys, I had fun. I don't want to take it into too much of Dave's time because he's going to step in. But I hope you guys had some fun today. Again, tomorrow morning, 6 a.m., join us. Subscribe to the channel if you haven't. Hit the like button if you guys had fun today. We appreciate it. Later on today, guys, 6 p.m., before the Blue Jays game, we're going to have that quick little 1-hour webinar, 90 minutes at the most, where we're going to talk about our trading toolbox. Okay, get to know our tools. Guys, we closed above that. We got an ignited bar. Let's see one more push to that yellow line, and then I'm going to close out my entire trade up there, the remaining 20%. Okay, and that's all I'm looking for. You know, I'm telling you guys, I'm not a greedy person. I trade from one yellow line to the next yellow line. Okay, and it's an ignited bar. Let's see if it can continue to feel like a rocket, getting right up there, and then I'm going to be exiting the entire trade. Yes, I know it could continue to go more, but this keeps me disciplined. It keeps me trading according to exactly what I want in the markets without second guessing myself. I know someone's going to say, Ron, what if it continues to go? I can say that all day about every single trade we take, but at some point you're going to have to learn discipline and stop worrying about what could have happened or what should have happened or it could have done this, it could have done that. Okay, again, notice how I didn't change the color of the zone because it didn't prove to me that the buyers closed above there. So it was ignited, it came up, couldn't produce that new high. Now it comes back down. So can the original buyers at the location here, the opening balance, continue to buy? If they're not here, sellers are going to move it back down to 50% of this bullish candle. If they can't hold, then it's going to come all the way back down to the opening balance here and where we initially entered. So you see now how it's kind of refueling itself like a rocket. Those initial buyers are asking again to trade back up here, but there's still offers above us. So it's still holding, but this candle could very well turn into a bearish pin bar or a bearish shooting star and continue to come down. So it's still holding its balance. It's still holding, but you know, now the sellers are in control. See, when they flip it black like that, they have regained control, and that's when it comes down now, okay? So it's a shooting star candle, and now we're testing the 50% of that previous bullish candle. Can we continue to make a higher low and come back up to the opening balance and continue to drive back up there, okay? And NASDAQ came right by that red line. Okay, the reason why I have that red line is if you look back at all of this structure, back when it was trading near the all-time high, you guys understand why there's a red line there, okay? So you see now it's a spin top. It opened bullish, came back down bearish, came back down to the open, came back up to the opening balance, and it's just kind of hanging around here. So, you know, we'll see. We'll wait for this candle to close the next 2.5 minutes. But Cash, thank you, bro. I appreciate you for all the coffees. Okay, I appreciate you, man. You don't have to do this, Cash. I keep telling you every single day, but man, mad respect to you guys. If everyone can give a shout out to Cash Longo. He's here daily with me and he keeps buying me a coffee. I think that's what keeps me going, Cash, is you buying me these coffees, giving me the caffeine and the energy to continue to go. You're much appreciated, bro. I wish you all the best. Success in life. Thank you, guys. Salute, Cash. Cash, I love the name. Okay, guys, I have to end the call. I'm sorry, but Dave will be stepping up now. I'm still holding that 20% runner. It will probably get tapped out, you know, but we'll see what happens. Okay, guys, I had a great session. Hopefully you guys had fun. I'll see you guys tomorrow morning, 6 a.m. Eastern, and to all the snipers in Zoom, we'll have that webinar at 6 p.m. If you can't make it, I'll have it recorded and it will be uploaded. We're just going to go over really quickly this trading toolbox, our favorite tools, how to use them, how to locate them, how to put them in the toolbox. Some of you guys asked me questions about, Ron, how do you even put these in a toolbox? So I know it's a very basic question, but we got to learn how to do this, okay? So I'll see you guys later today. Have a good day, everyone. God bless everyone. See you guys tomorrow. Thank you guys for all the likes, subscribe, and Cash, thank you for the coffee, bro. I'm going right now to get one. Thank you guys. Have a good day today. And I hope you guys enjoyed today's blog. Take it all about trading in a slump, okay? It's very important. Guys, I'll stick with this. I'll let you guys know as soon as they tap me out here. Remember, I have a different level. I don't trade with this FXCM. I trade with Fusion Market Broker. So I'll verbally let you guys know as soon as I get tapped out. I'm still in it. It's got a wick on the candle. Sherry, you're up 1% today. Excellent. Amir, my pleasure, brother. Sergio, have a great day today. Trevor, thank you for everything you're doing. Trev, I see you in the Forex channel. Continue, man. You're killing it in there. Good charting, good analysis. Vinay, thank you. Have a good day, guys. James, Mike, Kira, thank you. Have a great day today. Justin, thank you, bro. I appreciate you, the words of encouragement last week. Thank you, bro. Borex, Thank you, everyone on this call, YouTube and Zoom. Give a shout out to Mr. Forex Brandon. This guy's a legend in the group. Legend. When we're sleeping, the man is charting, helping out the team. We couldn't have done this without Brandon. Forex, thank you, bro. You're an inspiration to all of us. So I hope everyone, guys, we have more mentors here in the group. You know, Forex is a veteran, amazing, and helps everybody. Okay, so you know, thank you, Forex, for everything you do. You know, thank you, guys. I'm still holding this, but I you know, still building, but it's just the 20% running at break even. We'll see if it comes up, but probably going to get stopped out. But if it builds, just to let you guys know in advance, I will be taking full profit, the 20% out of that yellow line, if I can still last in it. But guys, thank you, guys. Have a great day. Shout outs to Dave as well. Dave holding it down with the signals, the trade ideas. We're like a whole army here, guys, working together. You can see the analysis here on gold, okay, trades taken, sizing, trade management, all of these things, guys. Securing 50%, moving stop loss to break even. Today's a ping pong day. That's how you want to trade with that mindset. Indices, right here now, like the US long coming up right there, you know, at the 623. If you guys need trade ideas, trade signals, or to help you with your trading, we do as much as we can do here at SST to help everybody. If you want to join the team, guys. We've been here for 6 years at SST. We want to help you guys all trading. Education-wise, if you need the education, myself and Dave, later tonight, we're going to have a webinar. Guys, anything you need to learn about what we're doing today, there's courses, everything broken down, you know, long-form boot camps, long-form webinars. There's over 120 webinars in here. I got to do some new ones coming soon. These are beginner level, intermediate, advanced, the super systems of trading. I'm going to start doing a little bit more of these, and we're going to continue with our Sunday morning coaching sessions. This is where shit's going to get real. We're going to talk about real aspects of trading, mental health. Really, you guys are going to control these sessions. You guys tell me. Each one of us in this group is going to have their day. So next Sunday, it might be, for example, Borex. Borex is going to tell me what he wants to learn, and we're going to go through it. I'm going to help as much as I can, and we're going to do it as a team together. You know, so I'll be there just in the background helping out, but I want you guys to conduct the call, what you guys need to learn, and I'll do my best as a coach to help. I can't read everyone's minds. I don't know what everyone needs, like in trading, okay? But I'm pretty much, we're all in the same boat. We are all traders. We know what we all need help with. And guys, we got free blogs available. That's at Trading in the Slump. Recovery mindset, you see how confidence can go through the roof once you get out of that slump and you're back in the rhythm, you're back in the routine. So hopefully Toronto Blue Jays can get back in the routine and wrap up these Yankees today, because I got a lot of money riding on these Toronto Blue Jays. They better win or else I'm going to pay my American friends all of my money. Thanks, guys. We'll see you guys tomorrow. I had fun. Let's look forward to tomorrow. Have a good day, everyone. God bless. See you guys tomorrow.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.